I'm not going to be going through step by step exactly what's happened in the markets the last couple of days. We're talking about something way bigger, but I do want to address what's going on in the markets. I just recorded another video that will be on my YouTube channel in a couple of days. In my opinion, this was a buy the dip opportunity. Nothing has changed in the thesis I'm about to break down for you. And there's another thesis that I've been talking about, which I call the monetary codex. And it talks about how the debt cycles work, the liquidity cycles, they move in 4-year cycles. None of that has changed. As a matter of fact, the video I just recorded was, what do I call it? I forget the title. But basically I was asking the question, is it over or is this a miracle opportunity? And I think this is a miracle opportunity. And if you're paying attention to the market, I mean, when I think Bitcoin's up 15, 20%, this, stock market's up 6, 8%. Some of the other plays that we're going to reference here in a little bit are up 25% in just a couple of days. And so I think this was an amazing opportunity. I was buying the dip. I was posting on my social media. I was buying the dip. So I'm not going to go through the mechanics of what's going on the last couple of days. I got YouTube videos on that. We're going to talk about something way bigger. And this is the quantum wave surge. I just wanted to address that because this is more relevant today than it would have been last week. And the good news is, while everybody's getting shaken out of the market, we're going to make a lot of money. So, anyway, I'm Mark Moss, and we're going to talk about this phenomenon, right? It's been consuming a lot of my time, my resources, my expertise, really over the last about 4 years. Okay, so you've seen me talking about this on TV, on podcasts, on stages. Of course, on my own platforms, I talk about a lot. I talk about the power of cycles, right? If you watch my content, I love history, I love cycles. And so you've probably seen me using charts like the 250-year. I talk about the political revolution cycle, the 80-year financial revolution cycle, the 50-year technological revolution cycle, a lot of other smaller cycles, 4 years, 8 years, 16 years, et cetera. I'm absorbed by them. And that's because they give us the clearest guide of what the future holds, and more importantly, how to position ourselves to win through them. All right. So like everyone's getting shaken up this week by what's going on. But if you understand the cycles and understand the history, you're like, no big deal. I'm actually excited. Let me put more money in the market while everyone's pulling money out. Now, over the last few months, I've been completely immersed in what I've been calling this hidden black hole or this investment black hole. If you watch my content regularly, you've seen me talking about that, right? It's appeared. And in order to understand this correctly, you have to unlock what I'm calling the hidden cycle in this quantum wave wealth window. About every 50 years, we have this quantum surge is what's happening, right? I call it a Q wave for short. Now, there's two concepts that I want to explain to you so you can understand this, all right? In this hidden Q wave wealth window, it's the phenomenon, right? And so I'm calling it this Q wave, this revolution for short. And it's a technological and a financial revolution that's coming together, converging, and it's sweeping through markets and it's changing the landscape of the world. In this Q wave wealth window that's just now entering the second stage, right? There's 4 stages. We'll break all this down. The second stage is the single greatest opportunity to transform your financial future, right? Just by tapping into this life-changing wealth potential that hasn't existed since the birth of the microprocessors, telecom, personal computers, all the way back to the 1970s. And back then, we also saw the dawn of new technologies that revolutionized industries and created unprecedented investment opportunities. Oh, look at that. My background just changed. What the heck happened? My studio guy just left. Well, you're going to get the living room background today. Is that okay? You guys okay with that? I'm going to leave it. All right. So we're going to be talking about that. And really, in these quantum wave surges, let me write this down. In these quantum wave surges, all it takes is one decision to invest in the right technologies at the right time. Now, over the last 6 months, I've identified 9 explosive companies that have already gone up by as much as 52%, 75%, and even more. And, these returns, they sound impressive because of the short time frames, but really they're really nothing compared to what we're going to see over the next few months, and the next 12 months is how long this wealth window is open. Okay, I'm going to show you that. But what I want to break down for you right now, because like I said, this Q wave, this wealth window, it's just opened up. We're seeing it in the market right now, and it's going to send the market in these certain sectors into overdrive, right? We're going to see highs that most people just aren't going to be able to understand. And as this wealth window accelerates, and to really understand this, you have to realize that most times it's hard to see things when we're living through them, like these last couple of days, right? This last week, like we're living through it, and emotions run strong, and fear overtakes things, and so it's hard to see them when you're living through them. It's the proverbial forest for the trees sort of thing, right? But right now, this is it. Like, this is the moment that everything in our world, everything in my life, your life, and our children's lives could change forever. It's really that big. So I'm just going to say this real quick before we jump in. Pay attention. I'm going to run through this for about an hour, probably. After that, I'm going to open up for live Q&A. I want to make sure that you understand this. I want to make sure that you know how to take this information. I want to make sure that you can go apply it. So make sure to turn off all your alerts, close your other internet windows, get a pen and paper and make notes as we go along. I'm going to talk really quick. As you can already tell, I get excited. And then at the end, we'll do the Q&A. So as you have questions, just write them down. We'll make sure we get through all those at the end. I've always gotten through all the questions. I can't always guarantee it, but we always have before. Now, over the next couple of weeks, the next couple of months, we're going to see entire financial markets continuing to shift like we're seeing right now. In the next 4 weeks, you won't even understand what's going to happen, right? We're going to continue to see these markets move. We're going to see the fields of crypto and AI and decentralization all move into this second stage I'm going to break down for you, okay? And the most important thing here, though, is that when the second stage of this wealth window begins its final rollout, Wall Street's expected to inject hundreds of billions of dollars, bringing these historic innovations to life. But it's critical that you just understand one thing, and that's the companies that are standing at the center of all this, who will be initiating these transformative tech projects, are not the pioneers in Bitcoin, crypto, AI, decentralization. As you're going to see in a moment, the companies who truly stand to benefit from this once-in-a-lifetime event are smaller. They're more agile, and they can grow up to 1,000 times faster. Now, if you've been wondering why, seemingly like no matter what you do, you just feel more poor, it's because you kind of are. And it's because the old way doesn't really work anymore. So you've seen, portfolios are dead. 60-40 portfolios are dead. Ray Dalio's famous. He got famous from Tony Robbins' famous book, Money Masters the Game, with his risk parity trade, is famous, the largest hedge fund in the world, Bridgewater Capital. He's been completely bleeding out. $70 billion have been pulled out of his fund because he just can't make any money anymore. And yeah, you see your 401k or stock account going up, but you're not getting more wealthy. And the reason why is because of this. This is what I'm calling the great fake out. Let me make it a little bit bigger for you. The great fake out. And basically what this shows is that the S&P 500 is going up in what we call nominal terms, but it's losing to the cost of living, right? And that's because there's an investing black hole, which means there's really just one place to be invested. Not like Ray Dalio says, and invest into 27 different things for risk parity. No. Forget your financial advisor and this diversified portfolio. No. There's one place to be invested. We're going to come back to this, okay? But you're going to see it. We're going to break that down. And right now, going back to sort of the traditional way that's not working, about 76% of equity mutual fund schemes, they've all failed to beat their benchmarks. Even worse, the mid-cap category, probably the worst hit, is failing at 95% underperformance. And almost equally as worse, the large and micro-cap category is 90% underperformance, right? It's just not working anymore. And it's because we're in this quantum wave cycle, right? In this revolution, this technological revolution, this financial revolution. And in my study of cycles, we know that each one gets bigger than the previous. And I've never seen a technological revolution combining with a financial revolution at the same time. And that's why it's creating such a big wealth window that we're seeing right now. And it's getting bigger every moment. Bitcoin kicked off, what became this entire crypto wave. It minted crypto millionaires left and right. But what we're seeing set up right now could be even bigger, because the second stage isn't about a single new technology, but rather it's a cluster of technologies where the sum is much more powerful than just the parts. So now when we combine AI, we combine crypto, it gives us a second chance, a 2.0 chance to get this again, because these technologies are giving us these new building blocks to build new things that we've never imagined before. Like, we can't imagine them because we don't have the blocks to build them. But now that we do, it's hard to imagine how it's going to rapidly transform society. And right now, of course, we want to benefit as investors, and we want to go beyond what Wall Street's trying to keep from us. But I know there's a lot of, let's call it unfounded and irrational excitement in the space, and we need to be careful for that, right? We have to be able to separate facts from the hype. And at this moment, it's, so pivotal. But so just real briefly, if you don't already know, follow me regularly, just real quick. My name's Mark Moss. I don't want to go deep into this, but I grew up in California. I'm still in California talking to you right now. I was close, maybe almost at the epicenter to the 1990s internet.com bubble. In 1999, I was still in my mid-20s. I launched my first internet company. I was able to raise some startup capital. We got through a couple of rounds. We were growing really fast. I thought I was going to get super rich. And then I got caught in the dot-com crash in 2000. boom, that company crashed, taught me some very important lessons. So then again, in 2001, after the dot-com bubble exploded, I launched another internet company, quickly became one of the largest e-commerce stores for sporting equipment, and that caught fire, grew really fast. We pioneered a whole lot of technology, online marketing, and I had a big exit from that. Then I built a high-tech medical device company, pioneering digital x-rays, digital cameras, paperless offices. I sold that company to the largest company in the medical space. Over the last decade, I've invested in dozens of early round private deals, venture capital. I've been managing a portfolio, advising others on investing and navigate markets. I was really early to Bitcoin and crypto. In 2016, I started writing one of the leading crypto research services. I started recommending Bitcoin when it was like about $300, Ethereum around $5. And, dozens and dozens of other picks during that time. During that time, in the 4 years I wrote that, I put out over 20 positions that went up by more than 1,000%. One of them did 100,000%. And don't worry, because there's a lot more of those coming. I'm going to show you that in a second. And since writing that newsletter in 2016, the price of Bitcoin exploded from a couple $100, went absolutely ballistic, surging to over $68,000. So for those investors that have been with me from the beginning, and taking that lead when it was $300, $400, $500, they multiplied their wealth by, I don't know, 500, 600 times, which is unbelievable. And that level of investment returns is like if you had invested, let's say, $2,000 and watched it grow into over 1.3 million. And that could have happened in the span of just about 8 years. Now, I still write about investing. I still write about markets. I'm a partner now in a leading Bitcoin AI tech-based VC hedge fund. I have a newly launched public company doing tech-focused M&A. I just launched at the Bitcoin conference here a few weeks ago. And I've built and invested through now 2 sweeping technologies. I had success in business, private financing, investing. So when it comes to the intersection of tech, finance, world-changing disruption, my opinion matters just a little bit, which is why you see me on YouTube, podcasts, radio. I've reached over 100 million people. You see me regularly on Fox Business, Kitco. I was just on Kitco the other day talking about this thesis. Stansberry, tech conferences, all of that. But enough about me. I don't want to bore you about me. Let's dive into what matters, okay? So what is going on with this Q wave, right? What is this Q wave you keep talking about, Mark? Well, like I said, it's short for quantum wave, all right? Quantum wave wealth window. And I view this fast approaching moment as the single largest catalyst in history with the ability to unleash a multi-trillion-dollar surge across several different tech stocks. And before I get into the full capabilities, what it's going to do and why I'm certain that for everyday investors is going to accelerate the wealth window like no one can even imagine, I just want to make something clear. When we talk about this new tech revolution, this cluster of AI and crypto and decentralization, and we talk about how it could become a multi-trillion-dollar industry within a few years, we have to understand it's going to be different than most people think of this. All right. You see, anytime we read an article about this, new technology, how it's going to improve finance, healthcare, manufacturing, cybersecurity, whatever, right? That's actually really small thinking. You see, the reason why is because humans are no good at imagining the future, because all we can do is imagine a better version of what we have today. So like we had map books, we'll have the internet with digital maps, for example, right? But we didn't know that our cars would be hooked to something called the cloud, driving autonomously and using something, called social media to navigate us around traffic because we didn't have those building blocks. And so this new convergence of technologies could end up becoming the backbone for every major innovation in the world. It's like maybe the difference between, walking on foot or going full speed in a Formula One car. And I'm not the only one who's connecting the dots here. As a matter of fact, we see that Wall Street is trying to get in this as fast as you can. I mean, have you seen the interest in Bitcoin and AI lately? Wall Street's waking up. I mean, Larry Fink, the head of BlackRock, was on CNBC like 3 or 4 weeks ago saying, I was wrong. I've done my research. Bitcoin is a legitimate asset. That's what he said. And so we see Wall Street is coming on board. They want to get into this as quickly as they can. They see the opportunity. And the thing is that somebody's going to make, this is a multi-trillion-dollar opportunity, and somebody's going to make those trillions of dollars. Now, I want it to be me. I want to make a big chunk of those. I want it to be you as well, not just the tech giants on Wall Street. And this is exactly why my company is called Market Disruptors, right? We have that chance right now. So let's break it down. We're going to break down the Q-Wave wealth window, what that is, how it works, right? Then we're going to look at what I'm calling this investing black hole. And the investing black hole is going to challenge everything that you know about investing and challenge everything that your financial advisor has ever taught you. And then we're going to see exactly how we should make are a few simple moves to take advantage of this Q wave wealth window. And I remember I keep saying, like, don't mess this up. We only have to make a few simple moves, okay? And most people are going to mess this up. Don't do it. But let's just jump in to truly understand this quantum wave cycle, this Q wave cycle. Let's look back. And so remember, they happen on about a 50-year time frame. So the last time we saw an opportunity this big, it wasn't the internet boom. It wasn't the internet boom of the 90s that I got started in. That was actually the tail end of it. It really started back in the 1970s with the birth of the microprocessor, which then brought us telecom and personal computers. Now, back then, we witnessed the dawn of technologies that revolutionized industries and created unprecedented investment opportunities. Companies like Intel. Intel was like one of the first ones at the head of that, microprocessor boom. They spearheaded it, and they saw their stock leap by 26,418% over 2 decades. I mean, that kind of growth turned modest investments into massive fortunes. Like, $1,000 in Intel would have turned into about $25,000. And what happened is, a lot of people are like, oh man, I missed it. That's too bad. It's too late, right? Well, not really, because then after Intel went up by that much, it went up another 26,000%. But back to the Q wave for a minute, we saw that the microprocessor, because it's a cluster of technologies, the microprocessor then led to the personal computer revolution, which led by companies like Apple, who saw their stock leap by 1.5 million% over 2 decades. And again, people thought, oh, I missed it. It's too late. But then it went up another 20,000% since then. Microsoft saw their stock go up by 57,000% in the first 2 decades. And again, people thought they missed out because they don't understand these Q wave cycles. But then it went on to do another 1.5 million% from there. I mean, this is amazing. This kind of growth turned modest investments into massive fortunes. Like just 1,000 invested into Intel would have turned into $26,000 or $48,000. But it's the second phase. This is the important piece. The second phase companies like Apple, Microsoft, where only 1,000 could have turned into $100,000 or even more. And these technologies didn't just improve existing things. This is the key, right? This is why it's hard for us to imagine it. They didn't improve things. Instead, they created entirely new industries, leading to these exponential wealth creation events. And we can trace this quantum wave, this Q wave, back over 300 years, right? So you see, approximately every 50 years, the world takes a quantum leap forward. We have a technological breakthrough that changes the course of humanity, and it drives financial markets. It looks like this, right? These technologies don't just improve things, but instead they create entire new industries. All right. So we can see that 300 years, about every 50 years. So back there, 1771 was the Industrial Revolution. We had machines, mechanized machines that could do the work of 5,000 men. 50 years later, approximately, steam engines and railways right there in 1829. We could now move stuff across continents. And 50 years later, steel, electricity, heavy equipment. I mean, I don't have to tell you how much electricity has changed the world. About 50 years later, oil fuels, automobiles, and mass production. That was 1908. About another 50 years, 1971, telecom. We just talked about that, the microprocessor, telecom, personal computers, the internet. And now about 50 years later puts us right here where we are today, which I'm calling the decentralized revolution. Crypto, AI, and decentralization. And it's easy to understand how the world made these quantum leaps forward in each of these Q waves. But again, more importantly for us right now, each of these Q waves created the world's richest families. The Carnegies, the Rockefellers, the Fords, the Bezos, every one of them started there. And one of the key pieces to understand here about this Q wave window, like any of the ones just mentioned, is that it's not about a single technology. It's about a cluster of innovations. So the only real place to make a lot of money in the last 50 years was, of course, telecom, personal computers, Bill Gates, right, and internet. And before that, the only place to really invest was Ford, GM, and GE. And before that, the only place to invest was like steel or oil, right? So you can see how this works out. And so in this 50-year cycle, we have to understand that there's 2 phases and 4 stages, right? And it's very predictable, every one of these. They last about 50 years. And there's the 2 stages and 4 phases. And the second phase is what we call the frenzy phase, which we're just now entering. Now, the thing is, this is the most explosive part to invest into. It's where the majority of the wealth is made. And even better still, while most investors feel like they missed out on the first phase of the Q-wave window, like Intel and Microsoft, oh, I missed out. The truth is, more money is made in the second phase. And even better, way better, it's less risky. It's more money and it's less risky than the first phase. And so this is what we're going to be looking at with Intel, right? With Apple, Microsoft. After posting these 25, 26,000% gains, they went on to do 1,000,000% gains. And so right now we're standing at the precipice, right? At the beginning of this brand new Q-wave cycle, the second phase, and it's going to build even more generational wealth than the first one did. So good news for you. If you feel like you've missed out, you're late to the party, you haven't missed anything. It's barely getting started. We can see it more represented here. I drew it so you can kind of see this. The red arrow there shows where we're at approximately right now. And you can see the first part, this big bang, is where we've been. So like Bitcoin, crypto, AI, it's blown up. And a lot of you feel like maybe you got in late. I was at the gym this morning and somebody asked me, is it too late? I feel like I've missed it. And I'm like, no, you haven't missed it. It's barely even gotten started. So you can see where I drew the circle. You can see how much bigger this next section is compared to where we've come from. And more importantly, what will be left after that. And so it's really important when you understand these 2 phases. Now, we also have to understand these move in these 4-year cycles. And the reason why it's important to understand this, I've drawn a red circle around where I think we're at right now, is because we have about 12 months left to really push hard and set ourselves up for this generational wealth. And today we're seeing it, right? We're literally witnessing the emergence of these new clusters of technologies where Bitcoin, crypto decentralization, and AI are all coming together. And it's not just a technological revolution, it's a financial revolution that has the potential to transform every industry and drive financial markets for the next 50 years. And to kind of put this into perspective so you can understand it, if we take oil, for example, so oil is a commodity. And it's an asset, right? You can buy oil. You can buy oil futures. Obviously, the world runs on oil. But then you have the oil industry around that. That's represented by all those little icons that I have there. And if you look at the last, 50, 60 years, you'll see that the price of oil, when adjusted for inflation, is averaged about $60 to $80 per barrel. All right. But while the price of oil, the asset, hasn't really gone up a whole lot, the oil industry has blown up. As a matter of fact, the oil and gas industry is the 8th largest industry in the world, worth almost $5 trillion. And so that's what we're talking about. Not just Bitcoin, a commodity or an asset. We're talking about the industry that's blowing up around it. And really, we're talking about an entire revolution. So Bitcoin is also similar, where it's a commodity or it's an asset like oil, but there's an entire industry being built up around it. And it's hard to imagine how the world will change based off of these types of decentralized technologies that are being built on this technology today. Trustless, transparent systems that can operate without central authorities, leading to more autonomous and efficient processes. And we've already seen how much wealth has been created in a short period of time, right? We saw, Bitcoin pop first. Then we saw it spill over into all the copycats, Ethereum, Solana, Filecoin, all the AI tokens that are popped up now today. And now we have the AI coming in with its unparalleled capabilities to process and analyze data, right? And that's already transforming industries from healthcare to cybersecurity. AI's ability to learn and adapt, making it a critical component of this new tech revolution. And really, it's driving efficiencies and innovations at unprecedented scale. But then when you add it all together, the decentralization, the AI revolution, we have no idea what's about to happen, but we can already see inside, we can already take a peek. Now, as I already mentioned, it's the cluster, it's the combination that's so powerful. So for example, the thing about Bitcoin is that its many attributes allow us to do many things impossible for the existing financial system. But let's just talk about 2 real quickly. 1, micropayments, and 2, it's personless, right? So now with the combination of AI agents, robots, automations, autonomous self-driving cars like this one here on the screen, Now we have the ability for them to take off and have their own bank accounts, the ability to make micro payments, to send and receive money and work on our behalf with absolutely, on their own autonomously. And this is going to absolutely explode into this second wave. But the thing is that it's nuanced. It's not like you can just say like, close my eyes and like throw a dart, right? Like the image, right? Like, oh, just buy NVIDIA, my eye, close my eyes, buy NVIDIA. And that's all the AI gains. No, it's going to go from company to company. It's going to be very nuanced. The AI and crypto together, the rapid emergence together has created the largest wealth window we've ever seen. And basically, anybody can financially transform their portfolios with the right ones, with the right AI and crypto investments. And that's why the time to take action, to do something to secure freedom for yourself and your family, just like people did back in the early internet days, just like they did in the early crypto days, just like they did in mobile computing, just like those days. But this time it's going to be much bigger than mobile computing. So I don't know whether you're behind on your retirement, you missed out on every major tech explosion of the last 20 years, or maybe you just want to know what it feels like to make that one life-changing investment that financially secures your family with 100 times windfall in the coming years. Well, this upcoming wealth window is going to accelerate that. All right, so let's now that you understand the phases, let's talk about this investing black hole. And this is going to challenge every bias that you have. And if you're a financial advisor, it's really going to challenge you. So the way that we profit during the second stage of this Q wave wealth window is by understanding this black hole. And to understand this, like I said, throw out everything that you've learned from your financial advisor, throw out everything that Ray Dalio has taught you. Because during this second stage of the wealth window, it's creating this investment black hole. So your financial advisor tells you that you need to diversify, right? So spread out your investments across 20 to 30 different asset classes because, you got to be ready for anything. But during the second stage of a Q wave wealth window, there's just really only one place you want to be investing. And in this case, betting against this with diversification is really what I call diversification. So back to this chart. Remember this, like during a wealth window that opens up every 50 years, like right now, there's only one place that you want to invest. And I really mean that, right? I mean, sure, the 6 to 8% that you're making in the S&P 500 is fine, right? I guess it's not keeping up with the rate of debasement, but at least you're seeing your portfolio going up. But if you want 20,000% returns or 50,000% returns like Intel, Apple, Microsoft returned in the last wealth window, in the first and second phases, there's really only one single place to put your money. Now, if we look at this chart right here from 2011 until 2023, this is showing the total returns of every asset class. So for like the last dozen or so years. And what we can see is that this is broken down by year. What we can see is that the best performing asset class over the last 12, 13 years has been Bitcoin, no surprise, with an annualized return of 145%. The second best performing asset, I drew a green box around them. The second best performing asset was the NASDAQ. The NASDAQ, of course, represents the tech stocks, so that makes sense. Now, we can see that it did about 17.5%, pretty good. Then down there, 1, 2, 3, 4, the red box illustrates the S&P 500. And during that time frame, it's averaged a 12.5% return. And then the gold, the red box at the bottom represents gold that returned about 2% annualized during that same time frame. Okay. Now, you might say, great, so I've diversified through that. I got 25% in gold. I got 25% in bonds. I got 25% in the S&P 500. And yeah, I got a little bit of NASDAQ, tech, Bitcoin, or whatever, right? But here's the problem. Well, your financial advisor probably wants to tell you that you just have to beat the rate of inflation, right? Real yields. Inflation's now down to, I don't know, 3, 4, 5%. So if you're making 8 to 12% and your S&P 500 doing really good, right? Wrong. What we can see is that that is not the real number. The real number is the rate of debasement. How fast is the money supply growing? Now, we know that since about 2011 to now, the money supply has been, the rate of debasement has been about 8%, but it accelerates over time. So since 2019, it's been about 10%. So that means you have the rate of debasement, 10%, plus the inflation, 3, 4%, plus a risk premium. So your real, what we call the hurdle rate, is about 15%. That's what you really have to make. The problem is if you need to make 15%, there's only been two assets that could do that for you, Bitcoin and tech stocks. So you're going to diversify into bonds and gold and mid caps and all these things, but not one single one of those has been able to beat the hurdle rate. So why would you diversify into stuff that has no chance? Now, it gets even worse because now if we look at NASDAQ and we price it in Bitcoin, not dollars. So it did 17.5% in dollars. But when I price it in Bitcoin, we can see the NASDAQ is down 99%. And when we take the NASDAQ and we price it in NVIDIA stock, which has been the AI proxy so far, we can see it's also down 99%. So we can see in these quantum wave cycles, in the second stage, there's only one place to put your money. It's not in a broad basket of things. It's in tech. Now, I want to go back to this, right? For everything that's saying, I see Bitcoin and NVIDIA crushed every other asset, but I missed out. It's too late. I missed my chance or whatever. Well, that's the same thing people said about Intel and Microsoft and Apple, right? Again, in the first stage, we see the emergence of the new technology, but they're so early, right? And it's kind of disconnected. And there's a lot of money to be made right there. And we've seen a lot of the top cryptocurrencies like Bitcoin and NVIDIA, but it's still so early. And more importantly, the problem with that first phase is that it's held back by scaling. Okay. So to really understand how to make money in this cycle, you have to understand this key piece. What's holding it back in that first phase is scaling, really speed and synergies. So during this stage, whether it's the automobile, whether it's the internet, whether it's Bitcoin, now it's AI, it's always been the exact same thing. It's always been scaling. Now, as we discussed before, Intel went up, 22,000% in the first phase, which was incredible. And then it went up another 26,000%. Same with Apple, right? It went up 26,000%, then 1.5 million or 1.5 million% first, and then 26,000% after that. Microsoft, 57,000%, and then 1.5 million. So you can see all of those show you that the second phase is not too late. In fact, it's where the money's made. But the best part, like I said, is the risk is removed after phase one, which means that you can allocate more money, right? When I started buying Bitcoin at $300, it was so risky. I couldn't allocate a whole lot of capital there today. But today, most of the risk has been gone. So now I can allocate large percentages of my wealth towards Bitcoin at this levels. And when we're able to do that, we can put in more money. And you don't have to, though, because it's so explosive. Like, in the second phase of some of these companies, I said like $1,000 could turn into 25,000 or 48,000, or with Apple and Microsoft, 1,000 could have turned into 100,000 or more. But here's the key piece. Again, here's what catches people off going from phase one to phase two. And here's why people think they missed the boat. And it's what you hear from people all the time. It's too slow. It will never scale. It will never catch on. And these people, they're not wrong. Okay. They're not wrong that the car, the internet, and Bitcoin, et cetera, was all too slow. And AI, they weren't wrong. But what they're wrong on is that it would never scale. You see, they were right that it was too slow and wouldn't scale, but that it was too slow. But they were wrong that it wouldn't scale and catch on because, of course, they have scaled. They do scale. They always will scale. And when they do, this is the key piece. When they get that scaling over the hump, that's when the Q-wave wealth window accelerates into the second phase. Think about the impact of the internet in the 1990s. Early investors in internet companies saw exponential returns as the technology transformed industries and created new markets. From 1995, when the first internet IPO came out, until 1999, the dot-com bubble created millions of millionaires. But most of those companies died during the dot-com crash in 2000, mostly because the market got too far in front of itself, because it was in the first phase, right? The technology was really held back. As the naysayers complained, it was too slow and it wasn't scaling. Same with the automobile. When the automobile was invented, within 3 years, there was 250 automobile manufacturers, but it couldn't scale. It was too slow. There's no gas stations, no service centers, no roads. But eventually it got fixed. So same with the internet. By the year 2000, it was too slow, couldn't scale. Less than 10% of people had ever bought anything online. Now, I'm sure you remember the internet, it was too slow to shop at that time, right? There were no stores. People were afraid to even put their credit cards in back then. In fact, as I mentioned earlier, I started an e-commerce store in 2001. And I went to these brands and I said, hey, I built this website. I spent a bunch of money on it. I'd like to sell your products. And these brands, they laughed at me. And they told me nobody would ever buy anything online. And I was like, well, I beg to differ. I think you're wrong. And, I'm happy just to give you the money, and it's on me if I don't sell it. And they said, we don't even want our stuff being sold online. It had like this bad connotation at the time. So I remember that. But let me show you another example. Here's how the wealth window accelerates in the second stage, and why the big money is to be made, right? It's still in front of us, not behind us, still in front of us. So for example, I'm guessing every one of you has a smartphone like this, right? But what you might not know, or maybe you've never thought of it, is that this device that we carry in our hand, our pocket, has more computing power than the rockets that took us to the moon. And with this device, you're completely connected to the outside world, the internet. And if we're being honest, most people's entire lives revolve around these devices. But again, it wasn't always like this. Now, if you're old like me, you probably remember phones used to have cords. They were bulky. Do you remember as a kid, you had to like go around the dial, and they didn't even have letters, right? They were just phone numbers. So you couldn't like program people into your phone. You had to actually like remember phone numbers. But yet today, we don't even use the phone the same way. As a matter of fact, the calling part of this phone is probably the least used app we use on this device today. But back then, all you could really do was make a phone call. And what most people don't remember about the invention of the smartphone is that it wasn't Apple that invented the smartphone. It wasn't Samsung that created the first smartphone. It was actually IBM in 1992. There's a picture of it right there. Now, this isn't something that gets talked about a lot. I mean, everyone thinks that IBM is this old, stodgy company, but their smartphone project was an utter disaster. And even though they had the right vision, right, they had great ideas, there was one glaring issue at the time. Anybody care to guess what it is? I keep saying what it is. Well, it was scaling. At the time, it was physically impossible to fit an MP3 player, a camera, a video player, all into a single device that could fit into the palm of your hand. You see, in the first phase of the Q wave, innovation is limited by its physical components like this, right? It's what we call the technological bottleneck. The speed and the usability of the internet was also a problem. It was just too hard to connect to the internet. The speed was so slow you couldn't download anything, right? So there was another technological bottleneck. It was too slow. But when the bottleneck got removed, then it opens up the door, like the floodgates open up for something like the iPhone, which came out just a decade later. You see, what eventually changed is in the early 2000s, we had a boom in microprocessing, and suddenly that bottleneck got removed. And then extremely tiny computer chips could accomplish things that had never before seemed humanly possible. I mean, there's 19 billion transistors in that phone now. And you could basically fit it all into a little camera. An MP3 player, a video player, all in the palm of your hand. And this is what really made the iPhone possible to do at the time. Now, the day that we crossed that tech bottleneck, the day that we solved the scaling problem, that's what opened up the door for the iPhone. Apple became a household name. It went on to sell, a couple billion iPhones, which was the direct catalyst that propelled Apple to erupt to almost 5,000% just since 2007. And I think that's exactly what's about to happen right now. This is exactly what we're seeing in the second phase right now with what I'm calling, 2.0. AI, Bitcoin, crypto as combined, and the tech bottleneck is disappearing. And what we really need to be paying attention to is that Apple wasn't the only company that profited off the iPhone. And this is the key insight here. All right. There were several smaller companies that had a really crucial piece, a heavy hand in the iPhone success. Apple shared the wealth with all of them. For instance, you've probably heard of a company called Qualcomm, right? They're the company that created the chips that allowed iPhones to access the internet. And since they partnered with Apple, the stock has shown peak gains of over 600% over the next 12 years. Another lesser known company that has similar trajectory was called Fingerworks. They created the iPhone's revolutionary touchscreen technology. And that's why Apple ended up buying the company, and the stock surged by 20 times. It was a huge deal. But there's another company that's been even more critical to Apple. And that's TSMC, also known as a Taiwan semiconductor manufacturing company. You might have heard of it with what's going on with Taiwan and China right now. And to be completely honest, they're probably one of the most important companies in the world right now. And that's kind of what the world's fighting over right now. They make the bionic microchips in Apple's phones and computers and tablets. They do the same thing for Samsung, and they've quickly become the main chip supplier for AMD, Qualcomm, even Intel. And of course, because of that, their stocks completely exploded. Since 2002, their growing dominance in this field has led to a 3,306% surge for their investors. And the reason why I bring up these companies is because, again, it's not just about Apple or Nvidia, right? It's a cluster. It's all the small companies, the partners in this that are so much more explosive. And it's going to create an absolute tidal wave of wealth in the second phase of the Q wave wealth window. Now we're witnessing a similar opportunity, but on an even larger scale. The potential returns from investing in this new tech cluster, they're huge. And we're talking about opportunities to achieve returns of 10 times, 50 times, even maybe 100 times or more, similar to the returns that we've seen in the past technological revolutions. That's why this is such a historic opportunity. And of course, the time to act is right now. But there's been another company that's even been more critical. And we're going to look at that. And more specifically, how do we find these players? That's really the key piece that we want to talk about. So you understand it's a cluster, but how do we find them? Well, when we look at the difference of Bitcoin and crypto, we can see that Bitcoin exploded onto the scene and it was too slow and it couldn't scale. And so then what happened is we had this barrage of new tokens or these smaller altcoins. And it was really sort of an arbitrage on the trend where people feel like they missed out on Bitcoin. So let's go find the next Bitcoin. Bitcoin is too slow. It can't scale, just like the automobile, and just like the internet, and just like the smartphone. And so we saw this. And in previous cycles, we saw like 2017, the altcoins did great. That's when I was writing my newsletter. As I said, I put out over 20 positions that went up over 1,000%. But that was phase one of the cycle. This is the key piece to understand about this. In 2021, we saw a completely different market because we were starting to go into phase two. And so today, altcoins, they've been actually very dangerous. Most of them are actually losing money. What do I mean by that? Okay, let me show you a chart. If you look at the total cryptocurrency market cap, which is basically a basket of crypto index, and then we just take the top 10 coins out. So right now, if you go to Coin Market Cap, which tracks all the coins, there's 2.4 million of them, 2.4 million. So if you just take out the top 10 and then you get all the rest and put into a basket, and then you price that basket in Bitcoin, you'll see that they're lower than they were all the way back in October of 2023, which was 8 months ago. And that's when this cycle was just getting started. And I think this picture basically tells you 1,000 words. Now, the last bull run, we were in phase one of the cycle. And so, yeah, you could basically bet on anything and you could beat Bitcoin, right? So back in 2017, 2018, when I wrote the newsletter, it was great. But this cycle in phase two, you've been punished for being in almost anything other than Bitcoin, especially overexposed sectors like gaming and things like that. In fact, since the fall of FTX, which marked the top of the last cycle, there's only been 8 tokens that have broken their previous all-time high against Bitcoin. And you got to keep this in mind when you're constructing, your portfolio, because even the best tech won't perform price-wise if there's no compelling reason to buy it. Why is this? Well, it's part two. It's part of the phase two part of this cycle, this part of the wealth window, right? When you understand the predictable phases, it gives you a way to invest through this. Besides the fact that we're seeing, massive dilution, thousands of tokens hitting the exchanges every day. It's no wonder why these alts are struggling. Millions of tokens, 2.4 million tokens, and only 8 were able to beat Bitcoin. Are you feeling that lucky? Because I'm not. But the key is that it's not over. There's still a lot of money to be made. You just have to invest into a different part of the cycle. You see, in phase one, in the Big Bang, now you can see it right there on the bottom left. It's called the Big Bang. Let me make it a little bit bigger for you. There you go. There's no clear winners, right? There's limited options for investing. So in the crypto example, you had Bitcoin, and everyone that missed it was looking for Bitcoin 2.0, right? And millions of other cryptos. And it worked great back then. But today, here's what's happening. Today, we're transitioning to phase two. And so now we have big, smart, what we call the smart money. You and I, myself included, we're called the dumb money. Smart money is institutional players. And so now today we see the big smart money, they're coming in. They want real players. They want real companies. And so today in phase two, there are other real better options to play the crypto AI wave. What am I talking about? Well, for example, while only 8 tokens out of millions were able to make a new all-time high priced in Bitcoin, real companies and real players like MicroStrategy, which when priced in Bitcoin is up over 300% in the exact same period. Or other real companies with public stock that allow big money, real money to invest into them, crushed it as well. For example, 2 public traded Bitcoin mining companies crushed Bitcoin's returns. Iris Energy in the same period was able to beat Bitcoin by over 200%. CleanSpark was another publicly traded Bitcoin mining company that crushed Bitcoin's return, doing almost 300% better, which is amazing. So what this means is that if you would have put 1,000 into Bitcoin, you would have made about 1,500 back. But if you would have put the same $1,000 into these real companies, publicly traded companies, you would have made back 3,000. So basically, these move multiples off of what Bitcoin does. Most people are still waiting for crypto to do that, but they don't realize that the money moved to a different part of the market. And if we go back to AI, NVIDIA has been the proxy for investing in the AI boom, at least so far, but there's also many stocks that move multiples off of NVIDIA. The problem with investing in NVIDIA at this point, though, is it's a monster size. It's a elevated valuation. I mean, I'm not sure where it's at after the last couple of days. It was as high as a 40 times price to sales ratio, $3 trillion market cap. And so it's hard to, know if NVIDIA can maintain its growth pace. But one AI stock that's been a surprise for most investors is AMD. The AI wave and its AI chip offerings helped its data center segment boost revenues by 80% year over year in the latest quarter. But again, the second phase is going to lead to much bigger gains and much safer at the same time. Similar to how in 2016, decades after the original boom that microprocessors had, there was a second microprocessing boom. Remember, there's smaller cycles within the bigger ones. And during that time, AMD released what's known to still have out today called the Ryzen chip. Now, before this innovation, AMD stock was sitting around $1.60 a share. But nowadays, if you look at AMD, it hit as high as $200 a share. Meaning, even if you got in on the second boom, you still could have made 10,839%, enough to turn $10,000 into over $1 million. Now, by identifying and investing in these emerging companies right now, we can position ourselves to reap the rewards of these technologies, revolutionize industries, and drive massive growth. Another one here, UiPath is on one of the leading robotics process automation, RPA companies, and it's specialized in software robots designed to handle repetitive tasks. Now, still, it's a relatively small 6.8 billion market cap, but this robotics stock company stands out from much larger competitors thanks to a 2.5 million member developer community. This brings a large number of developers into its ecosystem. And this is part of the cluster that's going to take off in this phase 2. Now, there's other companies like this one, Smart Global Holdings. They're publicly connected to the Department of Energy and Defense. They've worked with both Tesla and Meta in very specific ways. They've made it into their press releases, and it's still right around $1 billion in market cap. And it's a preferred partner for NVIDIA. Remember, these companies that are preferred partners of the bigger companies have a big benefit. In a recent year, they actually got 2 Partner of the Year awards in different areas. They have programs that specifically put NVIDIA hardware to use to help people build AI projects, including essentially building servers while using NVIDIA chips, as well as offering consulting and platform solutions in high-performance computing in general. And it's up 140% in the same period that we've been looking at. So while 8 cryptos out of 2.4 million have made highs, we can see there's lots of other areas in the market that are getting ahead. And the reason why is because that's how these cycles roll out. Now, remember that Bitcoin and AI plus decentralization isn't just about these individual technologies, but rather the cluster, right? So Bitcoin's already proven its potential as a decentralized digital currency. Right? AI is enhancing these technologies by providing the analytical and processing power needed to drive them. We see how it's transforming industries like healthcare, finance, things like that. But it's the synergies between these and the ability to invest in this tech cluster that allows us to make this a massive amount of money. Now, you know what? AI data centers, Bitcoin mining, electric vehicle charging stations, for autonomous vehicles, NVIDIA, microprocessors. You know what they all need? They also all need base metals. They need commodities such as copper for wiring all the data centers, wiring all the charging stations, which is why copper has been absolutely exploding. Tin is needed for all the microprocessors to solder them onto circuit boards. Nickel, lithium, uranium, and more. Remember, it's a cluster of technologies. Tin and copper, I haven't checked this in the last couple of days since the rout, but I mean, they were both up almost 60% in the last 9 months. Okay, so now that we understand what this Q wave cycle is, we understand that it's a cluster, and we understand there's an investing black hole. There's no other asset classes that are beating the rate of debasement, or what we call the hurdle rate. All right, so now let's talk about how we invest in this second phase of the Q wave. But I'm gonna take a drink of water. You guys still with me? I haven't been able to see the chat. Obviously, I've been talking pretty quick here. All right, you guys still with me there? Any? Give me a thumbs up. Yes, I'm with you. All right, there we go. Still here. All right, still there. All right, you guys want to hear about the investing in the second phase? Okay, good. Let's do this. Yeah, water is good. I need some. It's getting hot in here. Give me one more sip and then we'll keep going. I see you saying, what do you buy? I just literally gave you like, 6 or 8 names. Hopefully you're writing those down. I'm not one to just fill you full of information, right? I mean, I'm literally, I'm sharing the wrong screen there. There we go. I'm like, I literally gave you like 6 or 8 names. So hopefully you're writing this down. Okay. How do we invest in this? All right, so going back to this, repetition is the key to remembering. The first wave of the quantum leap, the Q wave, it set up the big players, right? So that's when Bitcoin got set up and NVIDIA got set up, right? They're the ones that are building the foundation. But the second phase is what happens with those building blocks. Now, as I said before, right before we started, it's about to unleash over $15 trillion. And we just have to be ready to grab a piece of it. I think of it like when I was a kid, there was that show Price is Right. And you had somebody, a contestant would go into like this plexiglass box and they had like 60 seconds. Money was like flying around. They had 60 seconds to grab as much as they can. That's kind of the way I see it. Right? There's about $15 trillion that's about ready to be unleashed. And we just have to be able to grab a piece of it. And again, it's the combination of them together that's so big. Sort of like, peanut butter is good, jelly is good, but when you put them together, they're great. And that's what happens when you combine AI's computing power and Bitcoin and crypto's decentralization aspect, and you put those together. All right. Now, Bitcoin itself has this repeatable pattern. Right? These are the last few cycles. And remember, in the past, they moved the Bitcoin alternatives because there was no good way for the big smart money to play. So, that people thought, well, when Bitcoin moves, then the altcoins will move multiple times of those. And they did. They weren't wrong about that. But as I showed you, those altcoins are not doing that today off of Bitcoin. Now it's the real companies, the Bitcoin alternative, the Bitcoin public plays that are doing it, right? Because this time we have real companies, publicly traded companies. And these are the ones that are now moving 3, 5, 10 times more than the price of Bitcoin. The second phase is going to be wild, but really it's life-changing. I don't want to say that we can be like it, but it was life-changing for the Carnegies, the Rockefellers, the Fords, the Bezos. And I'm not saying we're going to be Bezos, but shoot, I'd sure like to benefit from some of that. And so you can see what's about to happen right there. And of course, add in this AI multiplier. So let's talk about first about just the AI industry and what's scheduled to happen just by 2030, right? It's about to unleash this $15 trillion. And we just have to be ready to grab a piece of that. And the companies that are building on this are going to explode. And so what we want to do is we want to forget the Wall Street Journal, right? We want to be able to spot the trend. We want to identify the smaller players, find the backdoor one. We want to vet them. And then we want to make sure that they are asymmetric opportunities. Asymmetric means there's more upside than downside. Most investors get this wrong. It's pretty simple, right? I want the opportunity to make 5 or 10 times on my money with only a chance to lose 1 time. But most people want to risk 100% to make 5 or 10%. So we want asymmetric opportunities. Now, I'm constantly scanning the market for these types of plays. I have a full team of analysts that help me here at my market disruptors company, as well as at my fund. And we identify who we believe are the top 2 to 3 players in each sector. Now, the very best, the top 2 to 3 Bitcoin leverage plays that are moving, two times, 3 times, 5 times more than Bitcoin, like I showed you a couple before. The very best, 2 to 3 AI plays that we expect to move many times more than just NVIDIA and grab part of this $15 trillion that's rushing in. And of course, the very best, what I'm calling the backdoor plays. The backdoor plays are the ones that were heads or tails, we win, right? That's copper, tin, silver. We don't need to know which of the companies win. We know they're all going to need copper and tin. Now, regardless which ones win the lion's share of this 15 trillion that's just starting to rush in as part of this, phase 2 of this Q-wave wealth window. And you need to do the same. So you need to make your list. You need to watch them because it's crucial to have a strategic approach to investing in this space. And so in order for you to do that, let me give you a couple key strategies to consider. So first, if you're reading about a company on the front page of the Wall Street Journal, it's already too late. Let me open this up a little more. All right. Where am I at? Trying to get this one. There we go. So by the time you read about it on mainstream media, Wall Street Journal, CNN, any of these business outlets, it's too late, right? They're not even allowed to talk about these smaller opportunities. The explosive growth comes from the smaller opportunities, and they can't talk about them because they'd move the market too much, right? They move it. So the smaller companies give us these amazing opportunities like this. So that's the first part. Now, we've seen plenty of examples like this during the original internet boom, like this smaller, lesser known disruptor called Akamai Technologies. They were one of the earliest edge computing companies in the world. And in mid-2002, their shares were priced at less than $1. But as internet usage multiplied and more enterprises started to rely on their services, the stock wound up hitting $59 in 2007. So from less than $1 to $60. That means if you would have invested right before their explosion, you would have made 6,000% in just about 4 years, which is 60 times in less than 4 years. Now, on the flip side, if you're only investing in really well-known, reputable companies like Coca-Cola or Hershey, like Warren Buffett likes, or whatever, right? This type of growth might take you 40 years to get. And I get it. Some people like that style of investing, right? Some people want the super conservative, super safe, great companies, right? I get it. They're great. And they're going to help push your retirement savings up by, the 5 or 6% per year that your financial advisor is telling you about. But these quantum leaps, the Q-wave cycle, it only opens up every 50 years, right? Now you and I, we have the luck of being born at the right time, right? And not just being born at the right time, but to be paying attention. Some of us are old enough to have the benefit of hindsight, right? Like you lived through the previous boom, you saw it, but you missed it. Maybe you saw what happened in the 70s and the 80s, but you missed it. Now, we can't go back in time. We don't get a do-over. But what we can do is make sure not to miss it the second time. Right? My dad told me once is an accident, twice is stupid. So maybe I missed it the first time on an accident, but I can't make that same mistake again. The sign of intelligence is being able to get new information and change your mind quickly. And the thing is, as I keep saying, don't mess this up because there's no second chance again, at least not for another 50 years. And most investors typically won't be around. I probably won't be around investing in 50 years from now. So this is my chance. And the problem is that most investors typically wait too long. Right? They don't invest when these companies are micro caps or small caps because micro caps is where you're going to find these types of opportunities before they're discovered by the general public. Instead, people wait until these tech disruptors have already climbed into the medium, into the large cap range where they're more safe. But by then, they're growing at a normal rate of 5, 10% a year. And if that's the case, you might as well just invest in the S&P 500 because if you miss the early stage of the wealth window like this, it's virtually impossible to end up making the 1,000% or 5,000% or even 10,000% in a span of a decade like we saw in the past. Now, I do want to just warn you that I've been talking about in the span of 6 years. I just said here in the span of a decade. Warren Buffett's partner, Charlie Munger, said the big money is made not in the buying and the selling, but the waiting. So to make these 1,000 and 5,000% returns, we have to be willing to give it a few years. The next 6 years are going to be explosive. The next 12 months are going to be explosive. So it depends on how long you want to wait. But the thing is, and what I want to warn everybody about is do not sit on your hands. Okay. It could be the difference between waiting 30 to 40 years to triple your net worth or being able to do that in just over the next couple of years. Now, of course, all investment carries risk, right? And that's a huge win in a best case scenario. And of course, there's no guaranteed investments. So don't invest more than you can afford to lose, right? You've heard all that. But for right now, if someone were to ask me, like my parents, right, or my friends, like, where should I park my money right now? Well, this is what I'd tell them. I'd say it's an investing black hole. There's nowhere else to go. And that's why, if you want to take advantage of this, it's crucial to act on this information quickly. All the big institutions already, they clearly know something large is on the horizon. They already know that all the tracks with this Q wave that we've already been talking about. I mean, I'm breaking it here for you guys. They have like billion-dollar budgets for research, right? They know this as well, which is why when retail was selling over the last couple of weeks, they were buying. Now, it's also why you see the big institutions scrambling to get involved with Bitcoin. All these Bitcoin technology companies, the Bitcoin ETFs, the big banks have even sued the SEC to overturn SAB 21 so they could have the chance to get into the game. President Biden vetoed that. But this is how bad they want to get into it. And you can see them scrambling to get into AI. Right now, there's this AI race. Now there's all these ones launching. And if you look at the PE ratio of NVIDIA, or what happened to OpenAI, you can see that. And now they have their sights on the smaller players, some of which we mentioned above. And so the time to act is now. And that's why right now is the most exciting scenario that I see unfolding in Bitcoin and AI, in the Bitcoin and AI world right now. But you need to remember it's moving extremely fast. The smart money, they're trying to catch up any day now. I mean, I just got back from the Bitcoin conference, and I can tell you they were all there. All the big Wall Street players were there. And which is why, if you're watching, I really want to share something with you as quickly as possible, because however these opportunities are today, they're not going to last forever. As this second wave takes off, it's a pretty narrow window for opportunity. And, if we're savvy and we're quick, we can capitalize on it. So if you're watching, I want to share something with you right now. It's what I'm calling a special pre-investment report. And it covers every piece of critical information that you need to know about seizing this opportunity, in this second phase as this kicks off and explodes over the next 12 months. Now, I've put together a detailed investment guide that identifies the top companies, the couple that are leading the way in this second phase of the Q wave cycle. And these are the top microcap companies in and around Bitcoin, in and around AI, and decentralization, and some of the heads you win, tail you win, backdoor plays as well. And I think these ones are poised to scale 3 times, 5 times, even 10 times over the next year or so. Now, this guide provides the exact names of the companies I'm adding to my portfolio now, as well as all the actionable insights and investment strategies to help you make informed decisions and maximize your returns. So don't miss out on this historic opportunity. Now, this report, it also includes detailed, comprehensive charts, market research, and everything else that you need to make a well-informed decision quickly. My goal is that you could basically just take a look at this detailed analysis. And if you see what I see, you can get into these companies. You can make sure that you're poised and ready to take advantage of this as it all unfolds. Now, a lot of times with these very explosive opportunities like this one, it's hard to know how much of your portfolio that you want to invest. Like, should I invest $1,000 or $10,000 or $100,000? And I know sometimes people get held up with that decision. I told you earlier about my black shirt. I try to remove as many decisions as possible. So I get it, right? And it's actually a really good question that people should be asking. Deciding how much capital to allocate into an investment can be unclear at times. But the good news is that inside this special report that I'm going to be sharing with you, I discuss exactly how much I recommend investing based on your total portfolio size. And here, like, this is really key. Here's what I love about extremely explosive small companies like this. You don't really have to invest that much to have a chance at massive life-changing wealth. I mean, with a 10 times opportunity like this one, it means you can invest just $1,000. And by the end of 2025, that could grow into like $10,000. And let's say that you invested $10,000, which is a bit higher. I wouldn't say it's crazy. I mean, it depends on, what your portfolio size is, but that could turn into as much as $100,000. So that's what's so exciting here, right? This is a ground floor of something huge. And right now it's small enough that the big institutions, they're not all over it yet, but they will be, right? They're trying to get in on it pretty quickly. And it could be a single decision that upgrades your retirement, secures your family's financial future, and helps you pass down generational wealth. Now, as a father, that's something I focus on all the time. And all I care about is that no one passes up on this opportunity until they've at least considered all the facts. which is why I put them all into this analyzed pre-investment report. So you can have all the facts that you need. They've already been carefully analyzed, they've been vetted, and they're all inside this pre-investment package. And I just want to make one more thing, crystal clear. When it comes to investing and doing so successfully, a lot of people think it's a one-man or a one-woman job to be DEI safe. But the reality is that when it comes to building wealth and doing so consistently, it really takes a team. Now, I've been doing this professionally for about 2 decades now, and you need a network of highly trusted, knowledgeable, and well-experienced financial experts that have information that's simply not widely accessible to the general public. And it all boils down to who you know, or in my case, who I know. Because of the reach that I've built, because of the conferences that I go speak at, I sort of have the who's who of investors in my direct messages, and they help me connect the dots. We talk on a regular basis. You see them on my shows, and I get the inside track on these deals. Meanwhile, what does the average investor rely on? I mean, they watch CNBC, they read the Wall Street Journal, they watch some random guy on Twitter. Now, on the flip side, most of us everyday investors are forced to go about it, 100% on their own. But to be successful, it's 100% based on having the right people in your corner. And so I'm on a mission to prove that's the only way you should be making financial decisions going forward. Now, with any investment you make, that's why I've launched an initiative that will grant you the same level of insights and support that I use. And I call it my Sovereign Investor Syndicate. I like that word. I use it all the time because we don't need to rely on other people. Now, alongside myself, I'll bring you the latest information, also give you access to my team, my analysts on weekly mastermind live streams, live up-to-the-minute updates, live Q&A to keep you going. And we're going to go into the weeds to find the most undervalued yet overlooked companies that could surge in just a matter of weeks. And if you're trying to do this by yourself, it's not easy. I mean, you could if you got the time, but it's just really not easy. And a thriving community of almost 1,000 like-minded people like you, all working together for the same goals. So what we're really talking about is breaking research inside the Sovereign Investor Syndicate. We're searching for the very best, most explosive plays that fit into this phase 2 wealth window. And the way it works is basically each month, I publish a full report. Usually it's 20 to 25 pages. And it's 20 pages of research, of charts, of graphics. And we post this inside of our members area. And we also send out an email alert so you know when it's posted. Now, currently, our structure is to relay 1 or 2 of these really highly explosive investment picks per month. And these reports have a lot of details if you want, or you could just skim down to the bottom, get the actionable call, and literally just copy and paste it into your broker if you want to do that. I mean, if you can copy and paste, which I know you can because you made it here on the call. If you can do that, then you can easily just follow along. You can set up your explosive portfolio ready to surge as phase 2 of the Q-Wave wealth window accelerates. And so here's what I want to do. I want to go into Q&A. I know we covered a lot of information, but before I do, let me just tell you what's inside this Sovereign Investor Syndicate and how you can get this pre-investment report. If you give me just 2 minutes real quick, then we'll jump into the Q&A. All right, so I want to, since you're here with me, you've made it to the end, I'd like to extend an official invitation to join me as one of the newest members of the Sovereign Investor Syndicate. But it's something that's not high pressure to join. If you've been following me, you know I'm certainly not a salesperson and there's no high pressure. In fact, it's actually the opposite because I only want to work with people who really want to work with me. So if you accept the invitation, the very first thing I'm going to do is I'm going to give you unrestricted access to my specially prepared investment packet titled Investing in the Second Phase of the Q-Wave Cycle. Right? So that's the pre-investment report I want to give you. Now, remember, inside of this packet is everything you need to take advantage and position your portfolio for a massive crypto and AI surge. And this isn't rocket science, right? It's not guessing. It's not crazy. It's not pure luck. It's none of that, right? And you won't believe how much people are making in a very short amount of time just following these recommendations. And this is a high-level service, right? It's high enough for the most experienced and yet easy enough for beginners. And, I already give out so much free content, right? I'm speaking at all these conferences. I'm doing multiple videos per week. I'm on podcasts, etc. So I'm trying to help as many millions, tens of 100 million people as I can. But some people, they just want a little bit more. They want my direct help. And I get it, right? I want direct help as well, which is why, I built up my network that way. So you understand that my time is scarce. I could be spending my time running my hedge fund, but I know there's a lot of people that want direct help. And so I have something for you. Now, this is proven, this system is proven to work anywhere in the world because these are global assets, right? Virtually anywhere worldwide. Would this be something that you want? Where you could see my exact trades, exactly what I'm doing, see when I enter a position, see when I exit a position, see exactly how much we gain on each trade that we're making together. I mean, like my money is on the line too. And the thing is that you don't need to worry if you're brand new to investing. I'm happy to work with beginners with any portfolio size, with any amount of capital. I've done all the work to make it as easy as possible for you or anyone to succeed if you can copy and paste. And I can go through story after story of my students and changing their lives. I don't want to bore you with all of that. So let me just show you real quickly what's inside here, and we'll get to the Q&A. So basically, no, it's everything you need. It's pretty comprehensive. It's everything that you need. So it starts with these special reports. So every single month, you're going to get as the second phase unfolds, you'll get an investing in the second phase wealth window. You'll get a report each month that shows you all the positions that you're going to get. This is the pre-investment report. We have the top positions in AI, the top positions in Bitcoin and crypto, and the top backdoor plays as well. And then every single month, you're going to get a brand new report, the second phase report. Now, like I said, these are about 20 to 25 pages of research and charts, and they'll have one or two new high growth plays that you can get into right away. Like I said, you don't have to read all of them. If you don't want to, you can scroll to the bottom, copy and paste it if you want. On top of that, every single week, we have investor mastermind calls. Now, these are live calls that you get to jump on as we go through what happened. So like with what just happened in Japan, we'll go through that. Here's the charts. Here's the graphs. Here's what we're thinking. Here's the updates on our portfolio. And more importantly, you can ask all the questions that you want. This is real mentoring, coaching on every single week. That's 52 weeks that you'll get a live call to be able to do that. And then breaking alerts. In this phase two part of the cycle, the markets move really quick like they just did this last week. So we closed some positions and we entered a bunch of new positions. We did it really quickly. And so as soon as the market moves like this, we'll send out these phase two trade alerts. You'll get text messages, you'll get emails, and we'll enter them. Now, this is not like do it right now this minute. These are like weeks. These are like days and weeks plays. So you don't have to be sitting on your computer all day long. And then 24/7 live portfolio protection. You can see every single position in the portfolio, which ones are buys, which ones are hold, the entire history of the whole portfolio, everything else inside of there. And then this part, it's priceless, and it's a community. Unrestricted access to a brand new community of like-minded people, all working together, helping each other to give you peace of mind, right? And VIP members only. There's no tire kickers in here, no negative Nancy's, none of that. Real mentorship, real community of people working together to achieve the same thing. So it's everything you need to take advantage of this phase two wealth window. There's nothing else that you need. Live mastermind calls every single week to get your questions answered, monthly reports, quick moving reports, all of that. So let me just recap it all here real quick. You're going to get the special report. This is the pre-investment report, the top 2 to 3 plays in each niche. Every single month, you get the ongoing monthly copy or paste reports, the phase two reports. You get the breaking phase two trade alerts. 52 weeks, every single week, you get the live investor mastermind calls with coaching and mentoring. 24/7 live portfolio protection and unrestricted community access, which is completely priceless. Now, I'm giving you an invitation to join me and my team inside of this program. And for all of that, a year worth of us working for you, my team being on calls with you every single week, and a community all working together, it's just one simple payment of $1,997 for a full year. Now, this is a big discount to what we normally charge. And with these small types of explosive companies that we're going to be targeting consistently over the next year, this is something that you're going to look back and realize that $1,900 is just a drop in the bucket. I mean, especially compared to the insane amount of potential upside that we could see through the second phase of AI and crypto and the massive wealth potential over the next 12 months. And as I mentioned, or maybe I didn't mention yet, but I have a couple fast action bonuses that I want to give you here in a minute. All right. And I think these bonuses are probably even worth better than the Q-Wave report. If you want to see them, let me know. Just type in bonus real quick, and I'll tell you what those are. Okay, so the first one is basically double your money back. This in this double your money back, you're going to get the explosive way to explode your wealth by taxes. So most people go about this completely wrong. They're not able to invest properly, and they're not able to use tax efficiency. Now, for the average median income in the United States of about $60,000, if we help you set this up the right way, you'll save about $4,000. So, which is about double what you pay for this program. Now, that's just on the first year, but you could save it $4,000 every single year. So we'll have my legal team will do this. This is about a $2,500 consultation call. We'll include that for you for free. Now, if there's state filing and stuff, you have to pay the state for that, but we'll take care of that. You'll be able to double your money just with that. Bonus number 2 is the Codex Toolkit. Now, if you really want to understand why the market moves in these 4-year cycles, you want to understand how much you should be invested into each position, what your investor DNA is. There's a whole test and a quiz there. We have another tool. There's a whole toolkit. So there's another tool helps you quickly analyze all your assets and know exactly how much you should be putting in and how you need to rebalance. And then we have a scorecard to track all of this. Now, it's an entire toolkit, 4 tools that you need if you want to explode your wealth. It's a bonus value of $1,000. We're going to throw that in for you as well. Something to keep in mind here, though, is that smaller companies always have more growth potential. And that's the whole point of what we're doing, right? We want to identify the smallest companies with the highest upside. The drawback is due to the size of the opportunities that we recommend in this mastermind that we only let so many people in, okay? So we decide we're going to only have space for 100 new members today. So we're going to make sure everyone gets the attention and help that they deserve. And with over 100,000 members on the email list, with over, I don't know, I think we had 4,000 people registered for this event right now, these spots are going to go fast, right? Just like this market's going fast. And, you know, all of life is about right timing. And I just think if you could go back in time right now and pay a few $1,000s, yet in return, have someone guide you and show you exactly when to buy Bitcoin. It was only $300 like I did in the early days of my previous newsletter, you know, before it surged 20,000% to 60,000. Like, would that be a good trade-off for you? Or if you could have done the same with Ethereum when I recommended it was $5, like how valuable would that have been, right? If someone would have told you exactly when to invest before the massive 34,000% surge. Now, the reality is people are faced with opportunities like this every day. Very few actually take advantage of them. But hopefully this time with AI and crypto giving you another chance, you're not going to miss this again. Now, I do want to say too, if you're more advanced, let me be clear about this. It's already been tested by market and by experienced veteran investors. Many of these guys have spent huge sums of money trying to get even a small edge. They spent hundreds of thousands to get any advantage they can. And they told me that my approach is better than anything on the market. So you don't have to look anywhere else. You don't have to spend thousands for access. You can just give it a try. So let's just recap real quick what we have here, and then we'll jump into questions. So one, I'm going to give you this pre-investment report. So this is the entire report. I'm going to give you the top 2 or 3 assets in every single category, including the investment guide. Every single month, you'll get the brand new investment reports, the phase 2 reports that we put out. You'll get the breaking phase 2 trade alerts whenever the market's moving fast, like we just saw over the last week. Every single week, you'll get the live investor mastermind calls. These are coaching, mentoring calls where you can ask your questions live. You get the live 24/7 portfolio protection, unrestricted community access with over 1,000 people just like you working together, and all the bonuses, the double your money back bonus, the Codex Toolkit bonus, and oh, I didn't say this yet, and a 30-day personal risk-free promise money back guarantee. So basically what that means is you either love it or you leave it, meaning it works for you and you love it, or you ask for your money back and you get it back. So you have 30 days to try it all out. I don't care if it's 29 days, 23 hours, 29 minutes. You can get your money back. Now, I did put up in the chat, there's a link to an offer right there. There's a link. So you can just click on that right now if you want to go over there. Also on the screen, there's a link that you can see as well. So you could either open up your browser and go to that link, or you can click on the one that's up there now. All right. Let's see. I think we're ready to jump into the Q&A here. And so 30 days, money back guarantee. At least come in, get the report, read the pre-investment report, look at all the assets that are there. And if for some reason it doesn't work, just let me know. All you have to do is just reply to any email that you got, and you can get all your money back, and you even get to keep the bonuses too. You can even keep the pre-investment report just for trying it out. Because the thing is I only want to work with people who want to work with me, right? That's why I take all the risk. So no matter what happens, keep the bonuses, right? Keep them with my blessing, and then make money with them tomorrow. And, maybe after you've made some money with them, you'll come back. If not, we can still be friends. So real quickly, just to recap again, you're going to get the special pre-investment report, the top 2 or 3 assets in every category. You're going to get every single month. We're going to give you the phase 2 report, which is a full research report with a couple assets to buy. You get the trade alerts when the market's moving fast. We can pull quick cash out like we did over the last week. Every single week, you're going to get the live mastermind calls. These are live coaching, mentoring calls that you can ask your questions live. We'll look at the market. 24/7 live portfolio protection. We have our own custom app in our own community, unrestricted access to the community, 1,000 members all working together. The double your money back tax corporation plan and the Codex toolkit. And on top of that, 30-day money back guarantee. All right, let me skip through this. Is it worth it? Oh, yeah, it was worth it. 200% average return. That one's pretty good. 11 bagger. This guy made a 1,000% gain. That's pretty good. I bet you'd all like to make that. Doubled my net worth. Here we go. In 7 months, doubled my net worth. That one's pretty good. And again, it's all 30-day money back guarantee. You got really nothing to lose except trying it out, right? Like, is it worth gambling a few minutes of your time just to check it out? That's really what it comes down to. Or are you going to be left behind, wishing you had taken action just this one time to help you secure your family's future, right? If you missed out on the crypto boom 2016, 2017, when I recommended Bitcoin and Ethereum and a whole bunch of others, then this today is your second chance, all right? If you thought you missed out on Intel or Microsoft or Apple or Bitcoin, this is your moment. All you have to do is click the join button right now. Now, like I said, just one more time, keep in mind, because of the size of the opportunities we recommend, we're only accepting the first 100 members that take action. So spots are going to fill up really quick, and it's no wonder why the time to act is now. So click on that button right now to get started. And before we end, I just want to reiterate that this is probably the most exciting point of the technological innovation that I've ever witnessed. And look, I've been there, right? I've done that with, several of these types of innovations. I've benefited a lot from the internet boom, from the mobile computing boom, from the crypto boom. And this second phase of crypto plus AI technology boom is unlike anything I've seen before. And that's why I've been neck deep in it. And that's why I'm so excited that we get to share these opportunities. I just know that people who invest in this by targeting the right companies could completely transform their lives, right? This is the sort of thing that happens in these types of innovations. And even if you're someone who's missed out before, or you feel like you've missed out on every major investment story of the last 20 or 30 years, I just want you to know that you don't need to feel that fear of missing out, because this is the best chance I've seen to make up for all of those. All right. So that's it. I'm going to leave that up. I'm going to jump into Q&A. There's a box that says on chat, it says Q&A. So go ahead and put your questions over there, and I'm going to start answering these things. Here we go. Boom, boom, boom. What do we got here? Questions from BB. Assuming interest in cryptocurrency assets continues growing, it seems that over time, Bitcoin may be obsoleted by newer, more advanced blockchains. How do you think about adapting this evolution? It seems like there's some risk if not diversified. BB. So, I showed you the data, and I showed you how technology cycles adapt. And I showed that to you. So, obviously we don't know the future, but I already showed you the math of how all those other quote unquote blockchains are going. And you can also think of it like this. So if you're old enough to remember how the internet rolled out in the 90s, the internet couldn't scale and it couldn't be trusted. And so all these billion-dollar corporations went and set up private intranets. They called them intranets, just like a bunch of altcoins. But where are all those intranets today? They're all gone. Right. So you have to understand how technology works. I can understand the question, Brian. I've been asked that a bunch of times. But if you understand how these technology cycles work, then you can understand them better. Question from Flo. Is there any point in owning Bitcoin if it is not stored in a hardware wallet? Well, Flo, sure. I mean, of course, there's benefit, right? So no different than like a gold ETF, for example. You can get access to the price of Bitcoin. Now, obviously, yes, you should own it yourself. You should certainly store it. But let's just say, for example, you have money locked up in a retirement account that you can't get access to. You can't withdraw it. So you're going to pay huge fees and so forth if you get it. So that money in that retirement account, you could put it into Bitcoin through an ETF. Again, I don't recommend that as your first choice. However, if my money was locked up in a way that the only way to get access to the price of Bitcoin would be something like that, then certainly, Flo, that could help you out. Question from Joe Campisi. Hey, Mark, if the U.S. continues to print money, adding to an already high national debt, do you think that will affect the U.S. credit rating? And what does that do to the U.S. dollar, in your opinion? Well, what happens to the U.S. dollar is it continues to suffer from inflation, right? So to the first part, if the U.S. continues to print money, adding to an already high national debt, do you think that will affect the U.S. credit rating? At some point, maybe. I mean, we've already seen the credit rating of the United States get hit a couple times in just the last few years. So yes. And what happens if they keep printing? Well, as I said, more inflation, right? So as they print more money, the dollar buys less and less goods. So what happens when they continue? Well, the dollar continues to buy less and less goods. Question from Flo. Can you provide a list of 4 to 5 books to read to increase financial literacy, understand investing? You know, Flo, to be honest, I mean, I say this all the time. To understand investing, I don't think books are the best place to go. Books are great for like big theses. So you could go back and read like Benjamin Graham's book, right? The Intelligent Investor, for example. But like, that's not really how markets work today anymore. So I think the best way is by subscribing to newsletters, watching the market, watching YouTube videos, listening to podcasts, and watching the market go on in real time while the person is telling you what's happening. So the book is old. It was written 5 years, 10 years, 50 years ago. You want real-time play-by-play. That's what I would recommend. Question from Sayorzi. What were the other industries you said to look into besides AI data centers, Bitcoin mining, microprocessors, base metals, copper? I couldn't write them all fast enough. Okay, so Sayorzi, one, there's a replay that will be sent out. So just check your email and you can watch a replay and you can listen again. But what I'm saying is it's the cluster of these. And so, and as I said, the way that this unfolds, it gives us new building blocks to build new things that we're not aware of today. So we don't know everything right now, but we're looking for things in those clusters that are being built around that. So you threw out a bunch of those. So a lot of things like AI. So for example, I love companies in the AI space. So they could be building new AI softwares, new AI automations, new AI robots, certainly AI data centers. I mean, all of those things, right? You mentioned Bitcoin mining. Sure, but there's all types of Bitcoin companies that are taking off in the space as well. I just launched a new publicly traded one that'll be on the public here in the next couple of weeks. So there's all types of other companies. I mean, you listed a couple, but there's a lot of them there, Sayorzi. Question from Flo. I just have $15K to invest today, and I can invest about $500 to $800 a month on top of that. What would be the percent you put between Bitcoin, some of the natural minerals like copper, lithium, etc.? Unfortunately, Flo, to be honest, that's just not enough information for me to make that decision for you. And the truth is that you have millions of data points in your head that I'll just never get, no matter how detailed I ask these questions. So in the pre-investment report that I'm offering for you, it has that, as well as one of the bonuses is actually a tool and a questionnaire to help you find out that exact number for you. Now, there's no wrong or right answer to this. If you're 75 years old and you think Bitcoin is a bunch of smoke and mirror, I mean, maybe you just take a 1% piece of it. If you're 24 years old and make a lot of money and you think it's the next best thing, maybe you put 50% of your wealth into it. And so I just can't really tell who you are. Now, for me, I think that it should be, probably at least, I don't know, 10, 25%, somewhere in that range. For me, it's way higher than that. So you just have to kind of find out what works for you. Like I said, we have tools to help you get to that, but that's just not enough data for me to get to that point with you. Vladimir says, is there an option market on the companies on your pre-investment report? No, Vladimir, we don't do any options in what I do. Options are very specialized, and the truth is most people lose money in options. We do use options like in our hedge fund to help us hedge our positions, but we're not using them ultimately to make money, more to protect our money. But we don't do any options in here, Vladimir. It's an advanced strategy that I think, like I said, most people lose money on. There are services that do options, but we just don't do those. Question from RJ. Interested? Can I book a call if I want to discuss more, get more details? RJ, we've given you all the details. We're here live. We can answer any questions that you have for us. And then, like I said, every single week we have live streams where you can get on and ask any questions that you want. So RJ, hopefully you've got enough information. Feel free to ask away. I'm here to answer them for you, RJ. And then, like I said, you can get on Monday and do a live call with us and ask any more questions that you have. Question from Hugh. Outside of DCA, I think you're saying outside of dollar cost averaging in, what opportunistic buys and sells do you watch for in the assets you deal with? Well, I watch for events that just happened the other day, right? So when the move happened where Japan kind of raised their rates unexpectedly, the carry trade started to unwind, and the price of assets plummeted, I take that as a buying opportunity and I start buying. I can't tell you when the next one will be, but we're up to the question that you asked, opportunistically waiting for those types of dips, and we buy. Now, what we do is we want to quickly look and say, does this change our thesis? Does this change what we're doing? And if the answer is yes, then we need to pivot completely, depending on what that is. Or if the answer is no, then we buy the dip. And that's exactly what we did. We bought the dip. Question from Flo. How do you deal with taxes on capital gains when investing? Well, I use a CPA. I use a tax strategist, number one, to help me create tax strategy around what I'm doing. And then I use a professional tax accountant to then file my taxes. And there's a lot of things. I don't know the tax law in Canada, so I can't really speak. But in the United States, there's a lot of things that we can do to lower our tax rate. But you need a tax strategist in order to do that. And you have to do it proactively. So you need to be setting things up in advance to be able to take advantage of these tax efficiencies. Question from Marbo. I think there's a question, Marbo. Are you saying, I think you're asking, is it a good time to buy small family homes or wait till the market crashes and buy the dip like all the big billions are holding cash? Marbo, I don't believe that there's a big market crash in homes coming. So I believe that by the end of the decade, homes will be up. The U.S. median home price will be up 50%. I don't see a big crash. Now, sure, some cities, some neighborhoods are selling down. You know, there's some areas like Austin that got overbuilt and there's some weakness there. But on a U.S. national level, I think home prices are up 50% in 5 years. Question from David. How do we buy, sell crypto? Do you have a platform, Cold Wallet, crypto? I don't have a platform, no. Obviously, there's plenty of platforms out there. You mentioned crypto.com, Coinbase, Kraken, Gemini. If you're buying Bitcoin, you know, there's River, Swan. So there's plenty of platforms to go buy it on, and we can certainly help you and recommend some for you. We do not have a platform that we do it. Now, you asked Cold Wallet. A Cold Wallet is how you store it. That's not where you buy it. So you're sort of asking two different questions there. So I'd buy it on one of those platforms I mentioned, and then I would want to store it in a Cold Wallet, David, that you brought up. Question from Marbo. What's the point of millions holding cash now when it's debasing? Yeah, I don't know what the point of that is. Question from Dovel. Are the mastermind calls recorded? Dovel, they are recorded, yes. So what you can do is you can pre-submit your questions ahead of time. That way we make sure to answer those on the call. And then, yes, you can watch the call anytime you want after that, yes. Question from Paulie. What's the best way to store your crypto in a cold wallet? If I have one Bitcoin, what's the easiest? Ledger, which ones do you recommend? Thank you. I have always used Trezor. I've always found Trezor to be the easiest, and I've used Ledger. I've used Cold Card. I've used a whole bunch of other smaller ones along the way. I've always found Trezor to be the easiest one. I am currently, they do sponsor my podcast. So I am sponsored by them now, but I've always used them for a decade, or not a decade. It's been whatever, 6-7 years, since 2015. So I've always used Trezor. Yes. Now I'm sponsored by them. You can save some money, use my code Mark Moss, if you want, but, that's how I do it. Question from Sayorzi is asking about, what do I mean about the tokens that broke their all-time high against Bitcoin? What that means is that a bunch of tokens went up 24% in US dollars, or 32% in US dollars, or 78% in US dollars. But if you don't price them in US dollars, or maybe, I don't know what you're, maybe Canadian dollars, I'm not sure where you're at, but instead of pricing them in dollars, price it in Bitcoin. And what I mean is they haven't made new all-time highs in Bitcoin price. So I don't care about making more US dollars. I don't care about the 27% in dollars or 32% in dollars. I want to know, am I making more money on my Bitcoin? So that's what that means. What that means, if I to make it easier for you, what that means is all but 8 coins, you would have been better off just holding Bitcoin. That's what that means. Question from Eric. How applicable is this to Canadians? So it's applicable to you. Obviously, I don't know all the tax laws of Canadians, which is why you can have a free consultation with our tax attorney, who does. But of course, just not too different. In Canada, you can create a business, you can invest through it, and you get a lot of tax advantages that way. But Eric, to the question, I mean, that's better off posed to the tax accountant, not me. Question from Alex. Thanks for breaking back down your program, though. Could you break down the 8 assets we were supposed to learn about, please? Alex, I'm not going to go through the whole presentation again, but again, check your email. As soon as we get off of this, we'll send out some emails later tonight. You'll get a replay, and you can just watch it, and you could write it all down again. I'm not going to go back through all that again. Sorry. Question from Jason. You're also saying the same thing about the assets. We broke it all down. Maybe you showed up late. Apologize for that. Just get the replay. So there'll be a replay sent out, and you can watch that. Question from Jim. I'm in your four-pillar blueprint. Is this the same? Jim, the 4-pillar blueprint is a course. It's a program, education, right? It's videos and tools and things like that. This is a service. So this is not the same. This is a service where we're doing research for you, and we're providing that research so you can just invest along with us, as well as providing calls and things like that. So it's a lot different. They're 2 different programs, Jim. Question from Melinda. You say, I'm not really sure the question. It says your hedge fund ? I guess you're asking me what's the name of my hedge fund, maybe. I'm guessing, Melinda. It's not super clear. It's called the Bitcoin Opportunity Fund. It's a closed fund. That means we opened it up. We raised a bunch of money. We closed it. We're going to be opening up fund number 2 probably by October. So it's currently not open for new members, but by October, fund number 2 will be open. If anybody wants information on that, you can go to bitcoinopportunity.fund, bitcoinopportunity.fund. You can put your information in, and you'll be kept up to date when we open up fund number 2. Otherwise, just reply to any email that you got from us, and you can ask us, and we can get you more information that way. Question from Albert. Is there a way to have you invest for us? Or any other fund that you manage? Well, so Albert, I would just mention, so we do have a fund. It's called the Bitcoin Opportunity.fund, and you can put money in there. You do have to be an accredited investor, but you can check that out. Currently, like I said, it's closed, but we'll open up another one here in October, Albert. Question from Charles. You're already a member. Is it a different product? No. If you're already in with Zach, Charles, then you already have this. Question from Jack. How is this different from Market Disruptors Advisors? So Jack, Market Disruptors Advisors is just a community program where we bring in experts and we talk about markets and business and investing and things like that. So that's more like informational. Whereas this is actionable. So like I said, we're providing deep, detailed research into specific assets that you should buy. We're tracking them. They're in a portfolio. Like I said, with live mentoring every single week and masterminds and things like that. So it's a much different product, Jack. Question from Marvin. What is your recommended amount to invest in investing mentorship? Marvin, boy, I don't know what the right amount for you is. I mean, obviously it probably depends on what you can afford and what percentage of investing you have. For myself personally, I spend about $100,000 a year in mastermind programs. So I'm usually a member of a multiple at the same time, and we'll get together a couple times a year. We mastermind, we share ideas together. And most people that I meet in these masterminds are also members of multiple masterminds. And these are typically anywhere from $25,000 to $50,000. So for me, it's worth it because, I can make way more. I can make 10 times back on some of this information. Not everybody's at that level, Marvin. So you just have to kind of start where you're at. But I think paying for information is the greatest hack there is. Really, at the end of the day, what we all want, the only thing we really pay for, if you think about it, is we pay for speed, we pay for time, and we pay for certainty, right? So I'll pay someone to bring me food. It's faster than if I go buy it and cook it myself. I'll pay to get a book because it's faster than me doing 15 years of research to write the book. I'll pay somebody at the gym to put a workout program together for me because it saves me 20 hours of watching YouTube videos trying to figure it out on my own. It also gives me more certainty. I can pay that guy at the gym because it saves me 50 hours or 20 hours of watching videos to build a workout program, but it also gives me more certainty that it will work for me as opposed to me just getting a bunch of random data on YouTube and hopefully it works. So the right amount for you, Marvin, I don't know. It just depends on your skill level, what you're looking for, how much money you have to spend. But for me, it's worth a lot of money. Question from Joita. Can you cancel after a year? Yes, this is only a 1-year program. So what happens is you sign up for a year. As I said, it's a service. So we're literally working for you daily, weekly, monthly. At the end of a year, if you like it, which most of our members have been here for multiple years, it turns into just a monthly membership. So it's just $97 a month. And of course, you can cancel it anytime. So yeah, so it's $1,997 for 1 year. And then it goes to just a monthly billing of $97 a month, as long as you want to stay, or you can get a refund anytime. Or not refund, but you can cancel anytime. Pamela is asking, is there a 30-day money-back guarantee? Yes, Pamela, we have a 30-day money-back guarantee. So you can get all your money back if for any reason you don't like it. Like I said, I don't want your money. If you don't like us, we don't like you. Or that's not true. I like you no matter what. But if you don't want to work with us, we don't want to work with you. So yeah, 30-day money-back guarantee, Pamela Boyce. Marbo is asking if I need an assistant to work for me for free. Marbo, okay. I don't know what you can do. Send an email. What would you like to do for me for free? Send an email. Just reply to any of the emails that we got. Joita is asking, when are the live calls? The live calls happen every single Monday. And like I said, if you can't get on there live, you can pre-submit your questions. So we'll make sure we answer it for you. So you'll make sure that those questions get answered. Plus, the community is 24/7. Like I said, we have our own app. So at any time, you can just go into the community. You can post your questions. We can ask it there. You don't have to wait till the weekly call. You can get help anytime you want in the community. But we do have a weekly call that we get on. Brian, with the thirst for energy, these technology requires uranium, part of this wealth window. Brian, I think uranium is, it's not going to be as explosive over the next 12 months. I think uranium's a much bigger play. It's probably more of like a 5-10 year play. But it's certainly part of it because Brian, you're absolutely right. These are going to require an enormous amount of energy. Yes. Question from Jay. How much would you charge to speak to a small group of people? Jay, it depends. Just send me an email. Just reply to any of the messages that you got. Those all go to our support desk. They'll forward it over to me and let me, send some details about the event. And we can kind of go from there. Question from Demetrius. Say if I found one of these small companies and if I compare them to Bitcoin and it's showing strength against Bitcoin, will this be a good way to screen these opportunities? I don't think so, Demetrius. I'm not exactly sure what that means, but I'm guessing what you're saying, if it's showing strength against Bitcoin. So I'm guessing you're looking at it on a chart and looking at technical analysis. And, you're saying, well, if the price is moving against Bitcoin, it must be a good company. Not necessarily, right? So price is not really the best indicator. So we want to look at more like fundamental stuff, right? So for example, one of the companies we're looking at, they developed a brand new technology. They got 22 patents. They spent 20 years developing the technology. They had 9 peer-reviewed studies, and they just signed some massive partnerships, promotional partnerships. And we believe it's going to propel this company to like crazy new all-time highs as soon as all these new promotions come out. Those would be reasons why we want to buy things, not because the technical analysis chart looks like it's stronger against Bitcoin, right? We're looking for real companies doing real things, publicly traded ways to play them. Question from Fren: when do you expect the Bitcoin Ethereum would likely end peak during the cycle? Based off of the current macro cycle, sometime by the end of next year, Fren. Question from James: how did you come up with 1900 for the access? Why that number? Thank you. I mean, James, it's 2,000. It's $1,997. And to be honest with you, that's sort of been the price for years. And even though inflation has come, we haven't actually brought that back up. So that's something that my team has been on me about, trying to raise the prices. I've been trying to fight to keep them low for you guys, but that's why that number is there, James. Question from Mark B. I need help fast. My father wants to cash his IRA and pass it to me. Issue is a big tax bill. Mark, it sounds like that's a bigger problem that probably needs more help, and we have programs for that. It's not in this program necessarily. We'll be doing a live event here in a couple of weeks where we're going to be covering that. Or, as I mentioned at the beginning of the call, next month I'm going to be doing a private mastermind at my ranch in Texas, and we'll be talking about those types of subjects. So if you need help with that, James, maybe check out my ranch event coming up in September in Austin, or we'll be doing this live event in a couple of weeks. And Mark B. Or just send an email and we can get you into one of those programs, Mark. This program is not about helping you with that tax bill, but we do have other programs for you for that. Question from Giovanni: with all the chatter about recession and stock market crash, how much are you personally invested in the market? Giovanni, I am more invested into the market now than over the last year. I've been pretty much fully, what I consider fully invested. I had going back into 21, 22, I had as much as 50% out of the market, or 50% invested. Since for about the last year, I've been what I consider fully invested. I mean, I still keep some cash, but what I consider fully invested. And if you go back to my YouTube channel, Giovanni, you'll notice in October of 2022, I made a video, and it's titled, "There is no crash coming." In January of 2023, February, March of 2023, I made videos. It's time to go back in. I'm buying again. So I've been very public about all that, Giovanni. A recession is not a market crash. A recession and a market are two different things. And so anyway, that's how I feel about it, Giovanni. I am what I consider fully invested. Ahmad Samatir is saying, what's your approach to balancing risk and return? How do you adjust portfolios during periods of market volatility like last week? I don't worry about a week. My time frame is not a week, Ahmad. My time frame is a year plus. So I believe that over the next 12 months, it's going to be more explosive than most people can think. And most people are going to mess it up because they're looking at their portfolios on a weekly basis. A week, you're just never going to make it on a weekly basis. So I didn't adjust my approach. Now, what I did do, Ahmad, and in the group, we had a live call. We looked at all the charts, looked at all the data. What we do look is our thesis still intact? Or did something change that would make us change our mind? Now, what we saw is that nothing made us change our mind. Our thesis is still intact, so we did nothing. Now, it could have been that we needed to make a move. I'm not saying that something couldn't happen that would make us change, but we didn't change because nothing made us change our mind. So, Ahmad, what we did is we did sell, I think, 1 or 2 positions, and we bought a couple more. Questions from Garrett. According to your clusters thesis, are there any medical related fields, companies that could also be a part of this massive Q wave that are developing in the AI Bitcoin space? Yes, obviously, medical related, for example, is probably going to be a really, really, really big area that AI will disrupt. Some really smart guys I know say that probably within the next couple of years, it could be medical malpractice to practice without AI. So definitely be big. However, we're looking for technology plays, not software plays necessarily, right? So think Intel, Apple, Microsoft, not Salesforce, right? Something like that. Question from Ilya. You said we have about 12 months to get in. Is it the 12 month before Bitcoin starts to fall in late 2025, or is it the opportunity to get in before the assets get too expensive and we miss the opportunity to gain much? It's both. It's both, right? Like we potentially could see these things go up 2, 3, 5 times in the next year. So we have that, and probably we'll have a 6-month drawdown after that, and then we can keep going all the way to 2030. But to the second part of your question, yes, the assets will be way more expensive and you'll have missed a big chunk of the opportunity. So both of those things that you posed are correct, right? We have a year to make an enormous amount of money, and then we'll make more. I mean, this isn't going away. As I broke down, it's a 50-year cycle, but I showed you the bulk of it is in front of us right now, the bulk of it. So of course, you can buy it in 10 years from now and you still make money, but the bulk of the money you'll make will be gone. Question from Angus. What are material concepts and skills recommended to be successful in utilizing the market analysis and mentorship? What are the skills recommended? I mean, you need to be, you mentioned concepts and skills. I mean, you need to be able to read the reports and digest the information. And I understand in the beginning, it's a little bit like learning a second language. You're not really sure exactly what it means. But this is what I said earlier, like books are outdated. The best way to learn is to get the reports every month, be on the calls every week. And we're literally coaching and mentoring you through it. So like, hey, look at this chart. Look what the BOJ did. The reason why the Bank of Japan did this is because here's what China did. So look, if China does this, here's what's going to happen. But if the Fed does this, here's what's going to happen. And so we're like literally breaking those scenarios down for you and you're watching it happen in real time. That's the way to learn. So what do you need to be successful in utilizing it? Well, you need to be open, right? Open-minded, because it's probably going to challenge a lot of beliefs that you have. So I would say you need to be open-minded to receive the market analysis and learn from it, Marvin. Question from Flo. Does it matter which platform you buy your Bitcoin from? I mean, not really. Some platforms charge more or less. Some platforms are easier and more difficult to work with. But then some platforms don't allow you to pull your Bitcoin off. So, I mean, that's certainly something. But other than that, some fees or ease of use, something like that. Question from Bo says that some newsletter told him there's legislation coming that'll make owning crypto illegal or be taxed. So there's zero to prove that. We have 3 presidential candidates running in the United States right now: RFK Jr., Trump, and Kamala. 2 of those 3 are running on a pro-crypto platform or pro-Bitcoin platform. 2 of the 3 presidential candidates are running on it and want to put it onto the U.S. government's balance sheet. We have active senators. Senator Loomis has already submitted a bill that's already made it through the first round, which also authorizes the government to put Bitcoin on its balance sheet. So I don't know where they've got that number from. They're obviously not paying attention. Because what I see is laws literally going through multiple states in the United States. I believe Oklahoma, Montana, 3 or 4 states have actually passed, put constitutional protection to own Bitcoin in their laws that the feds cannot usurp. So I don't know where they got that information from. I'd say that there's basically 0 chance of that happening, Bo. Ahmad is asking, do you focus on dividend paying companies? We do. We like cash flow, so we're always looking for cash flow, and we have a handful of cash flow plays that are open. Yes, we do. Dan is asking about ultra wealthy. Dan, you're saying that they're attempting to set up a technocratic neo-feudalism. Yes, they are. It's very scary. Is your goal to build a breakaway community? I'm assuming you have money to do that. Dan, I don't know about a breakaway community, or I'm sorry, Dan, I don't know about a breakaway community. I live in Southern California, but I have a ranch in Texas that's in an area with a whole bunch of other people that I know that also have a whole bunch of ranches. And there's local militias and they're armed to the teeth. And so if I need to, I can go there. I'm also building a house in Mexico that's almost ready. It should be done in about 2 months. And I can leave and go to Mexico. I'm working on doing some stuff down in El Salvador. And so I can go down there as well. I don't know if I wouldn't say that it's a breakaway community, but yes, I am making backup plans for my family. Yes, Dan. Nada is asking, can my program be seen as market manipulation if several of us are buying, selling the same stock together? Nada, I appreciate the kind words and thoughts here, but we're not that big. We're certainly not that big. We can't move markets. Nowhere near that size. So the answer is no, not even close, Nada, not even close. Question from Tom, would you recommend long-term options or just buying the stock for some I kind of mentioned this earlier about options. I don't recommend options. Most people lose their money in options. Options create too much difficulty, complexity. And so we don't do that. There are some people that all they do is options. In my hedge fund, we use some options for some hedging strategies, but that's because my partners that are doing those trading strategies have been doing it on Wall Street for 20 years. I don't do them personally, and no, we don't do them in the newsletter, Tom. Question from Lou. What are your thoughts regarding the volatility in the markets around elections, along with August and September being historically the worst 2 months to invest in the market, historically speaking? Tom, I'm sorry, Lou. I've answered this multiple times. I don't think about the next month or two. I'm sorry. I just don't. I started my career in real estate. My real estate projects were, I was fixing and flipping homes. Those were year-long projects. Then I started building, and those were 4 or 5 year projects. Now I build businesses, right? I'm a venture capital investor. I invest in the companies where I have no liquidity for 7, 8 years. So my time frame is just different. The big money is made in the waiting. So I don't think about 2 years. I'm sorry. I don't think about 2 months, Lou. I just don't. It's too hard to know what's going to happen in the next 2 months. I feel much more clear about where things will be in a year. Now, Lou, to the point that you're asking, though, if there's a lot of volatility and price were to go down, let's just say hypothetically, then I would use those as buying opportunities as long as my thesis didn't change. Question from Angus. Do you make any calls on companies that I'm sponsored by? No, I've never have. Angus, that's a good question. I do have sponsors for my podcast and things like that. I always disclose, hey, this is a sponsor. And the answer is no, we've never opened up a position. This is something that actually gets people confused inside the community. They're like, hey, I saw you talk about this company. How come it's not in the portfolio? And the reason why is we never do that. Legally, I could do that legally, but I just don't even want that appearance. And so we don't. Question from Eddie Guerrero. Why did Bitcoin drop this week through this uncertainty? Eddie, so when you think about correlation, markets being correlated, you think about it as a percentage. How often is the market correlated? So sometimes it's correlated, sometimes it's not. So Bitcoin is getting less and less, 90% correlated, 70% correlated, etc. But when the markets drop, everything gets correlated. Everything drops at the same time. Just go back to any period, 2000, 2008, 2019, 2020, everything drops at the same time. What happens is, specifically in this Japan situation, is that because of this carry trade that was getting unwound, people are getting margin called. And when you get margin called, you start selling anything that you can to get cash to put in something else. And so that's why everything goes down at the exact same time. So it's what percentage are they not correlated is the question that you're asking. Everything becomes correlated in a market crash like that. Question from Graham. What's the average time we need to spend per week to make the most of this offer? Good question, Graham. So what I'd say is that, at a minimum, I would probably recommend spending 5 to 10 minutes a day, just quickly, like looking at your portfolio, just browsing at it, right? You could do that at the gym or before you go to bed. That's a minimum. Better, I'd probably spend 30 minutes in the community talking to people, looking at some headlines, listening to some of the calls that we put out. Once a month, we put out the report. You're going to want, 30 minutes to an hour to kind of read that, take action on that. So I'd say at a minimum, 5 to 10 minutes a day. Maximum, I mean, you could be in the community chatting all day, but I would say realistically, an hour to a week, something like that. Graham, I think it's a good question that you ask. For most people, we spend, 12 years going through primary school, another 4 or 5 years going through secondary school. Then we get jobs and we spend, all this time to get better and better at our job and make more and more money, get raises, advancements, things like that. But we don't want to spend any time thinking about our money after we've made it. So we spend all this time thinking about making money, thinking about making more money, and actually time spent making the money. But then we spend almost no time thinking about what we do with the money afterwards. So it's a good question. I think more people should spend more time playing with it. I think about the story of Michael Jordan. Michael Jordan was doing a basketball camp for kids. And one of the parents came up to him and said, "Hey, Michael Jordan, how much time should my kid be practicing if he really wants to make it?" And Michael Jordan said, "He's never going to make it." And they're like, what do you mean? You didn't even answer the question. He said, "Well, you already told me. If you're asking how much time does he need to be practicing, he's never going to make it. The question is, how do I get him to stop practicing?" Right? So if you really want to be good, you got to put more time into it. It's not saying you got to spend 24/7 on it, but there's the minimum, and then there's, anything above that's better. Question from Adam. Or is this mainly Bitcoin and based on the asset as well as stocks that will benefit from second phase? I'm not sure if there was a first part of that question, Adam, but I think it's the cluster of technology. So it's the technologies that are being built on and around Bitcoin and AI and decentralization into the second phase. So it's not just Bitcoin or Bitcoin stocks, it's the related ones in that cluster that we're focusing on. Question from William Poe. If we invest in Bitcoin, how do we receive our return from our investment? Well, you sell it, right? So you buy it at $1, you sell it at $2, you keep $1, right? You buy it at whatever it is, 60,000 a day, you sell it at 120,000, you keep the 60,000 and change, right? So that's how you do it, William. Whatever you buy, you hopefully sell it for more money, right? You buy low, you sell high, and you keep the difference. Question from Steven. I have $1 million to invest, not tech savvy. Luckily got my Bitcoin and Ethereum off of Voyager before it crashed. Well, good job, Steven. Is the community dummy proof for beginners to navigate how to buy and store Bitcoin and invest in other assets you recommend? Steven, I would definitely say it is. I mean, you saw some of the testimonials of people saying that it works for anybody. And I'd say that because one, we try to, if you've been watching my content, I make things very easy to understand. But number two, you have an entire community that are there to help you. So if you have a dummy question, no questions are dummy, but if you have a dummy question, they have a whole tribe and a whole community there to answer those questions. And then you have weekly live streams every week that we can jump on and ask those questions as well. So I would say there's probably no better place to be for a dummy proof, because the immense amount of support that you have is just, I don't know if there's another community that has that type of support. So Stephen, to your point, yes, I would say it is dummy proof. You have all the support and help that you could ever need. Question from Frank. What does the $97 per month membership provide? Frank, you pay the $1,997. And then that's for a year worth of service. And at the end of a year, it continues to bill at just $97 a month. So it's not a $97 a month service. After the year, it moves to that, Frank. Hopefully that makes sense. Question from William Poe. If the market's safe, if Warren Buffett is pulling out a major amount of money from his investment, should we be concerned? William, a couple things I'd say about that. Number one, how much money did Warren Buffett pull out? Oh, it was a record amount. Cool. Yeah. But didn't his portfolio go up by 50% in the last 4 years? So inflation, right? So you have to think about it in terms of percentage wise. What percentage of his cash or what percentage of his total investable worth does he have parked in cash? That's a better way to look at it. So the sensational headlines are all, oh, you pulled out billions of dollars. The reality is that inflation made his portfolio worth so much money, but on a cash percentage basis, it's sort of in line. It's at the higher side, but it's sort of in line with what his normal cash percentages are. So it's very sensational when you look at the number, but you have to look at it from a different perspective, William Poe. Question from Jim, do you have to be in the 4 pillars to participate in this? No, you don't. Those are 2 separate things. So it sort of goes back to the question that someone was asking earlier, like how much time should you spend? The more, the better. And so if you want the additional education, then we have that course for you. But you don't have to buy both of them. You can just be in one or the other, Jim. So yeah, no, you do not have to be in the 4 pillars to participate in the sovereign syndicate or vice versa. But yes, you can get them together and you can save a lot of money on that. Beatrice Moore is asking, which platform do you recommend to make the investments? You need a brokerage account, so you're going to need a Charles Schwab or E-Trade or Fidelity. If you're international, you need like Interactive Brokers or something like that. Those would be the ones I'd recommend. It doesn't really matter to us which ones you use to buy and sell assets. Inside the community, you can ask other community members what they think, which ones they like, and you can try out a couple different ones and see which ones work best for you. But I mean, we can recommend them, and you're free to use whatever you want. Joe Campisi is asking if there's early access to Bitcoin Opportunity Fund for the members. I mean, when it opens, right? I think we're going to probably raise 50 to 75 million on the next one. So I think there's going to be plenty of room to go around, Joe. But certainly just go, yes, the members will hear about it first. So certainly you'll probably be the first one to hear about it if you're a member, Joe. Some other things that early members get too is I mentioned at the Bitcoin conference a few weeks ago, I launched a new company that's going public on the Toronto Stock Exchange in a couple of weeks. And I'm one of the founding members of that company. And I invited some of the members to get in on that deal with us. We invited, I think we got 30 or 40 not high net worth, but accredited investors to come in on that deal, Joe. So those are some perks that sometimes members will get. Question from Cade. What are your thoughts on the WEF? I mean, I've made dozens of videos about what I think about the WEF. What do you make of it when they say you will own nothing and be happy by 2030? I would say, first of all, you already don't own anything. What does that even mean? Well, that means that the stock in your account, if you own Apple, Google, Tesla, whatever, you don't actually own that legally. Legally, you don't own it. Legally, your broker owes it to you. The money that you have in the bank, legally, that's not your money. Legally, it's the bank's money. They owe you money. Your house, even if you pay it off free and clear from the bank, you still have to pay rent on that every single month to the government, or they take it from you. So you don't own anything already. So I'd say you kind of already do. The other thing I'd say about that is that my goal is to also own nothing. What wealthy people want to do, Kate, is we want to own nothing and control everything. Meaning my trust, my corporations, my LLCs own things, and I can control those trusts, but I don't own them. And then you ask, does it have an impact on how I invest, and does that stuff worry me? Yes, it does have an impact on how I invest, which is why I bought a ranch in Texas, and it's why I'm building a house in Mexico, and it's why I buy certain assets that I think will be resistant to that. Charles, when is the ranch barbecue at your ranch scheduled? I believe it's going to be September 14th, 15th, I believe is the date. Anybody who's interested in going to that, just send an email, just reply to any emails and say, I'm interested in the ranch event that Mark's going to do. We can get you details on that. Or you can actually just go to, so just do that. Question from Tyler, what percentage of allocation to stock versus crypto does the program invest into? Most of what we invest into, Tyler, is all publicly traded stocks. That's what the second phase is all about. Real money, trying to find real companies and real plays. Fran is asking where I think Bitcoin will peak at the end of the cycle. Fran, it's all over the board. I think it could be, and I know this is a big number, but it could be anywhere from 100,000 to 400,000. I think if Trump or Kennedy were to win, I mean, Trump is the favorite to win right now. Still, Kamala's gaining, but Trump is the favorite. I think if Trump wins, I think $300,000-$400,000 Bitcoin is in play. If Trump loses, then it's probably more in the 100,000 range. Question from Donna. Feeling lost, but want to learn and build generational wealth. I've not invested anything, but have followed you for 4 years. Donna, you've been following me for 4 years and you haven't invested in anything. Oh, man. Well, in 4 years, you've missed out on a lot of profits, Donna. I don't really know what to say other than I've kind of already said it a lot, right? I'm afraid that most people are going to sit on this information, not do anything with it. You got to get in the game, right? You got to get in the game. You don't really have a question here. What's another thing? Oh, you signed up. Okay, good, Donna. You signed up. There you go. Can you build wealth with 50K? You certainly can, of course. That's a great amount of number. Should you take the 4-pillar first? I mean, if you're, a real beginner, Donna, you've been sitting on the sidelines for 4 years, then I would say more information is probably better for you. So should you take that course? I mean, probably. You don't have to. It's not a prerequisite, so don't feel obligated. But, if you're feeling lost and you seriously want to do it, then spend a couple more bucks and guarantee your success, That's what I would say, Donna. Question from Glenn. Great webinar. I have too much debt now. Hopefully next year I will have it paid off. Will I have a chance after paid debts to survive? I will hope to have 10K saved soon after June next year. Glenn, I don't know anything about your debt situation, so it's hard for me to comment, but let me just say that paying off debt first is not always the best option. The question that I would ask myself is, if I pay off the debt, I'm saving the interest that I'm being charged. But what is that amount of interest? Am I paying less interest than what I can make in the market? So for example, some people want to pay their home off in 15 years instead of 30. But if your mortgage is 3, 4, 5%, why would I pay that off? Bitcoin is returning 50% a year right now. So I'd rather just take the money and make 50% on it than pay off debt that's 5%. I mean, I can stick it in US Treasuries and make 5%. So why do I want to pay the debt off? Now, let's say it's, credit card debt and it's at 25%. Then maybe you want to try and pay some of that off, so it just depends. But that's one way I think about it, Glenn. I like debt. I use debt to my advantage. And paying it off early is maybe not always the best thing, depending on your situation. Question from Brian is asking about Bitcoin ETFs. Could it be used to manipulate markets? It could. We don't know. We don't know the answer. My thought process behind this, Brian, though, is that basically what you're asking is, could BlackRock manipulate the price? So they probably could, but let's just think through this. Maybe they could, but would they, Brian? Would they? What's in it for them? Let's just play this out. So if BlackRock spent, I don't know, let's say $1 billion to build out their funds, they have the biggest Bitcoin ETF that's out there. All the compliance and software and management and legal fees and attorney fees, hundreds of millions at least, right? And now they've got the largest Bitcoin ETF. And how do they make money back? How do they get a return on that investment? How do they make money? Well, when people buy the ETF, obviously, right? So if they crush the price, if they manipulated the price, if they crushed the price, if they suppressed the price, would more people buy the ETF or less? Less, right? But then they don't make any money. But I thought they were greedy and they wanted to make a bunch of money. But if they manipulate the price or suppress the price, they don't make any money and they just spend all this money to make money. So just you have to kind of think through these things a little bit, Brian. That's my thought process anyway. Question from Flo. 1 BTC gets to 3 times its current value. Will you sell? If not, how do you actually get the return on your investment? So Flo and anybody else who's listening, I have a book that's free. You can get it. And it's on my website, onemarkmoss.com. And it answers this exact question. And the question is, no, I don't sell. And the reason why is my goal in life is not to get more paper currency. In the game of wealth is not our highest pursuit. I believe serving others is our highest pursuit. But in the game of building wealth, my goal is to get more assets. I want to see my net worth go up every year, not currency. I don't want more dollars in the bank. Elon Musk became the richest man in the world because he owns businesses, and the businesses became more valuable. Gates or Bezos became rich because he's held Amazon stock for 25 years. He didn't sell the Amazon stock and put cash in his bank. As a matter of fact, like a year or two ago, Elon Musk was completely broke. He was worth billions of dollars on paper, and he was upside down. He had no cash at all. So the question that you're asking is, when do I sell Bitcoin? Why? Why would I sell it? My goal is to see my assets get bigger, 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 bigger. Now, I work. I make money, right? You guys are going to pay for my services. I make money, and I take the money I earn, the currency, the dollars, and I turn those into assets. And my goal is that my assets get bigger, bigger, bigger till I die, and those assets go to my kids, and my kids make those assets bigger, 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 and it goes to their kids. And so the goal is not to sell them. The goal is to increase the value of them, if that makes sense. There's a whole ebook. It's for free. Go to my website, onemarkmoss.com, and you can download it for free. Now, you could sell it. Sure, of course. To sell it back to dollars, of course. Question from Eric Chauvenac. Getting the membership now. Thank you, Eric. Can't wait to see you inside. Yes, everything's updated. Everything's updated so in the portfolio is 24/7. It's always updated. It's always up to date. Jack is saying that he heard from another friend that my public YouTube views are more bullish than what members receive inside. That's bearish. So I think, Jack, I think maybe the reason why there's that discrepancy is because on the weekly basis, we're going through the market data. Here's what happened this week, right? And a lot of what's going on is bad news. For example, just this week, the treasury auction was horrible. Less people are buying treasuries. Like, that's bad news. Like, Japan's trying to unwind, right? Like, there's a lot of bad news. And so maybe seeing that bad news makes people fearful, and they think that it's bearish. For me, I believe that bad news is good news. So what does that mean? That means that if less people buy the treasuries, that's bad. That means the credit of the government could be decreased. Someone asked that question earlier. That's bad. That means, what does that mean? Well, that means that the Fed is going to have to print more money. That's bad because that means more inflation, which means my dollar buys more, but it's also good because my asset prices go up. So information is both bad and good at the same time. And I guess it depends on, Jack, if your friend was a glass half full or glass half empty kind of guy, right? I see the bad news and say, that's bad news, but I can use it to be good news, where somebody else might look at that and say, well, that's bad news. And so that's bad news. Now, Jack, to the answer of the question, he missed out on some trades, he says, because maybe he was scared based off of us explaining bad news to him. However, that did not stop us from opening positions and making a lot of money. As a matter of fact, we beat the market by 500%. We beat the market by 500%, Jack. So I think that's probably what happened. I can't really say when he was a member and obviously what was going on during that time, but probably listening to see what's going on in the market, a lot of people can get extremely bearish. Now, I have this unique ability maybe where I look at what the WEF is doing, and I look at what is happening with the presidential election. I look at the wars in the Middle East. I understand what's going on in the markets, and it's all bad news. However, the reason why I understand that bad news is so I know how to navigate around it. So I don't let that overwhelm me. I don't become a victim. I don't get scared. I don't go, woe is me. I go, okay, so this is happening, so here's what I'm going to do about it. So for me, it's like more informational. But I could understand, Jack, to your point, maybe your buddy was overwhelmed by that and he thought everything was bad. So anyway, maybe that's what happened, Jack. Here's Charles, Jack. So right below you is Charles. It's a wonderful deal, guys. Mark and his team are wonderful, and I enjoy all the guidance on Mondays. So Jack, I gave you an answer, Jack, but you can hear Charles saying that right there. Thomas, will the updates and trade alerts also be providing sell signals when positions? Of course, yeah. So not only when to buy, but of course when to sell. Everything's in the portfolio. Everything's updated. We send out text message alerts, emails, the whole thing. Yes. Ahmad is asking, how often will we review the performance of the recommended investments? I mean, we do it weekly, right? We go through the portfolio weekly. Obviously, it's posted live. Everyone can look at it all the time. How can you be assumed that you're taking the same calls? I mean, I don't necessarily say that you have to take every single call we put out, and maybe some of them you shouldn't. And so, there's no guarantee that we're taking the same calls, right? We have a whole portfolio of stuff, and some people buy different things, which is why some people have different results than others. Trying to skip down, see if I see more questions. I see a lot of comments, so thank you guys for the comments. I appreciate all that. Question from Flo: can you have a price for Canadian? This US dollar is tough for Canadian. As I said, right, my price hasn't changed in 4 years, and my team is like, Mark, what are you doing? Like, I mean, everybody got pay raises, everybody's making more money. I need to raise my prices, but I've kept from doing that. But I'm trying to provide as best service as I can. I mean, I provide as much free content as I possibly can. And it costs me a lot of money to put out that free content. So, Flo, there is no special price for Canadians. However, if you need some sort of a payment plan, send us an email. Say, hey, could we break this into payments, or I want to pay you in Bitcoin or something like that, and maybe we could try to work with you from that standpoint. Question from Beatrice: do you get investment recommendations every day? No, certainly not. So, like I said, every week there's a report that goes out. I'm sorry, every month there's a report that goes out once a month. So you're gonna get one or two. And then if the market's moving really quick, we might send out a couple more throughout the month. So maybe, 1 to 4 per month, sort of a thing. Question from Graham: met you in Nashville at one of the Bitcoin parties. Can we pay for access to the community with Bitcoin? Yeah, Graham, funny you said that, and glad I get to meet you in Nashville. Yeah, you certainly can. Just send an email to support and just say, hey, how can I pay in Bitcoin? And we can set that up for you. I will let you know, though, if you pay in Bitcoin, anyway, yeah, just send an email to support. We can get that set up for you. Question from Daniel: what are your thoughts on XRP? Daniel, when I wrote my cryptocurrency newsletter, we opened it up at 17 cents. I sold it, I think it was February of 2018 at $3.25. We bought it 17, sold it 3.25. It was an amazing trade, one of the best ones that I had in the portfolio. I don't think about XRP anymore. I think XRP's entire use case is gone. I don't see any reason why I'd go back up, other than XRP Army is fanatical and they might drive it back up on sort of a pump and dump. There's just no use case for it anymore. So I liked it. I believed in it back in the day, but things change. As I said in the beginning, like a sign of intelligence is being able to receive new information and change your mind. And so certainly there was a point where I thought XRP was the best thing in the world. I recommended it. I bought it. I owned it. I just don't anymore. And I know that's going to make some people mad, but that's just my thoughts. Mean is asking how long you typically hold a position on average. I would say short term for me. So like if we open up like a trade, short term is going to be weeks to months, and long term would be months to years. So that's typically how long I hold a position. Now, Bitcoin, I've had it open for years now, right? But short term for me is weeks to months. Long term for me is months to years. Kyle, what's your best flat broke in debt resource? My best flat broke in debt resource, Kyle, is a product I have called Capital Creators. So if you're flat broke, you need to go make money. Investing is not something for you right now. You need to make money so you can then invest it. So you need to make money. So that's Capital Creators. So every month I write a report that gives you like a new 7-figure opportunity. Start a niche newsletter, start a car rental business, like different ideas like that. And I don't know, I think it's like $50 or something. It's very cheap. Start with that. Create a side hustle or new business. Go make yourself a few $100,000, and then you have the money to invest. So that's what I would do, Kyle. Question from Victor: What company is safe to buy Bitcoin from? I mean, any of the big ones. I mean, Coinbase is a publicly traded company. I'd say it's pretty safe. I like to use River.com is pretty safe. Swan Bitcoin is really safe. Gemini, Kraken. I mean, those are all good companies that you could buy Bitcoin from safely. Jesse is saying, Victor, Trezor. Trezor is a wallet that you would store it. That's not where you buy it, though. Question from Flo: how do you buy assets with your Bitcoin? So that's a better question, Flo. So let's just say, for example, like my goal is to get my assets and grow my assets and have more assets when I die than I started, right? So I will sell an asset for cash. Now, I might say I don't want this house anymore, and I want this house instead. So I trade an asset for an asset. And so to the point that you're asking, Flo, I could say okay. I mean, this is a real example. I told you I'm building a house in Mexico right now. I'm basically instead of buying Bitcoin, I'm buying a house in Mexico. I would rather have the house than Bitcoin. So it's a trade. I'll trade an asset. So that's how I think about that, Flo. Jessia just signed up. Thank you, Jessie. I can't wait to see you inside. 4:37 in Capri. Oh my gosh, that's so crazy. Go get some sleep. Ahmad is saying that a side note, he's a member of Motley Fool, and he can 100% confirm that this is a lot more, meaning that Motley Fool charges way more than I charge. So much that Ahmad signed up. So for anyone who's thinking that this is expensive, this is extremely cheap. Like I said, I haven't raised the prices in 4 years, even with inflation, just because I have higher end products. I have a $50,000 program for some people, and so I've tried to keep this really, really low for people that need it. Ahmad is asking if we do pre-market trade alerts. Not typically, Ahmad, because what we do isn't really that short term, right? What we do is longer term. So we're not usually trying to get in and trade before the market opens and close out. Question for friend: how do you access the book mentioned in onemarkmoss.com? Yeah, it's right there, onemarkmoss.com. So just go there, and it's titled "How to Retire Off of Bitcoin Tax Free." I think is what it's called. Yeah, so just scroll down. It's a tax-free guide to building tax-free Bitcoin income stream. So you just download that. It says get now. Just go ahead and just download that and get that. Eric just signed up. Let's make some money. All right, Eric. I can't wait to see you inside there. Tyler, do you have a better offer for those that held and stay on? Tyler, I don't. I don't have a better offer. As I said, well, as what was it Ahmed said up there? He's a member of Motley Fool, and it's way more expensive. So this, he said 100% better deal, and he signed up. So it's already such a good deal. I have a better deal. I have lower end programs. So like the Market Disruptors Advisors is cheaper. It's $97 a month. You can sign up for that. You just don't get the picks that we have here. But thanks for staying on, Tyler. There is a 2-pay option. So if you don't want to pay the full amount today, you could pay half, and then you could pay half later, Tyler. So that might interest you. So stick around for that. Byron says, all my money is tied up in property and not liquid. Would you go back to renting to free up that cash flow to be more aggressive? I don't consider my home that I live in as an investment. Rental properties are investments. My home is my home. It's not an investment. Would I sell it to free up money to invest into? Maybe. If I was single and I hated my house, I didn't really like it, maybe, sure. I rented for a long time before I bought, after I had to reset after 2008. Where I'm at now with my kids and my neighborhood and their friends, like, no. Like, the whole reason I want money is to get the house that I have for my kids. So I wouldn't sell it to get more money. I don't want the money. I want the house for my kids. But if you're single and you don't care about your house, yeah, maybe you would. Question from Frank. Thank you for this, Mark. Seriously considering diving in. Frank, what are you waiting for, buddy? What are you waiting for? I mean, come on. Like, this is going to be a drop in the bucket for how much money we're going to make in the next 12 months. You're going to be looking back in a year going, why was I even on the fence on this? I mean, literally. I mean, all you have to, if you put $1,000 into these plays, I mean, you're going to make way more than that. All right. Caleb says I'm in. Let's go. All right. All right. Whew. I got through all the questions. This is late. This is late, to be honest with you guys. I don't normally go this long. I was hoping to get out of here 30 minutes ago. It's late, but as I told you guys from the beginning, I typically have, so far I have not been on so long I couldn't answer everybody's questions, and I don't want that to happen. Question from Caleb, I'm in. Let's go. All right. Beatrice is in. All right, Beatrice. Frank, we're just waiting on you, buddy. Question from Mean, is there a minimum investment fund you suggest? If you don't have at least $1,000 to invest, you probably should not be investing. You should probably spend that money to go figure out how to make more money. Go buy a Facebook ads course, go buy a high ticket sales course, go buy a pressure washer and start pressure washing driveways. Like, use that money to go make more money. If you don't have at least $1,000, that's what I'd say. Mean is probably the minimum. Flo is asking, what's the difference between this and the 4-pillar blueprint? So Flo, the 4 pillars is a course. It's education. So, somebody had asked, like, what's the best way to understand the lingo and the terms and investing and all that? That's the 4 pillars. That's the course. You learn about what are the different assets? How do I use them in my portfolio? Why would I buy this one over this one? How do I think about allocating through that? How much money should I invest? All those different things. That's what you'll learn in the course. But then once you have that information and you're ready to start buying something, then what this is this tells you what to buy and sell. So they work really well together. They complement each other, but they're completely different. So one is like teaching you to fish. The other one is giving you the fish. But it's not just giving you the fish. One teaches you to fish and says, good luck, go fish. The other one is more like a fishing coach that's taking you out on the boat and is teaching you to fish and giving you the fish at the same time, if that makes sense. So they're very complementary, but yet they're very different. Yes. Bradley's in. All right, Bradley. Friend says, what is the minimum for the Bitcoin investment fund program? Friend, the first fund that's closed now had a minimum of 250,000, and that was for accredited investors. I believe on fund number 2, we're probably going to lower it to 100,000, but I'll know more in a month or two when we get around to opening it. So, friend, just go ahead and put your email in that box, or just stand by. When we open it back up, we'll let you know. But it will probably be in the 100,000 range. Like I said, it's down from where it was before. All right. Well, that's all the questions. It's been a long time. I'm ready to go home and see my wife and kids and get some dinner. For a lot of you, it might be really, really late, and you stayed up really late and you need to go to bed. So whatever time it is for you, let's get this wrapped up. But final closing words. Look, whether you do this with me or do this on your own, don't sleep on this opportunity. There's a lot of money to be made, and you're not going to make it sitting on your hands. So do your research, spend your time, do something. If not with me, do it with somebody else. Get some friends, build a peer group, do something, but do it right. If you need my help, hit me up on social media. I'm pretty easy to get a hold of: Instagram, Twitter, YouTube, whatever. I get thousands of comments a week. We try to answer a bunch of them. And we have communities for as low as $100 if you want to get in lower. And with that, as I always say, I'm here for you. And my biggest goal is your success. So as I always say when I sign it off, to your success. I'm out.